Reddit is not really a cloud player or data center builder, so whatever gets said on that front shouldn't affect them, I would say. As for the proxies, I guess, yeah, all the smaller neo cloud players, CoreWeave, Iran, Nebius, etc., would definitely move after hours on any comment of capex, supply, demand, memory players. Although memory players are going crazy, but yeah, those are tomorrow.
Neil, are you still in Micron?
Yes, I am. A bit less than at the start of the year, but still, yeah, still in it.
That's why he was in Vegas. He's able to afford all these places.
It's all the semi guys going on vacation, eh?
It says the guy who just came back from vacation.
But I go on vacations even if it's a bad market.
Because he's done that well.
Yeah, exactly.
All right. We got 3 minutes. So here's how it's going to go. All four of us will be looking for the results. Whoever gets it, we'll try to say it so that we can get the information out there. Obviously, priority before all of the other names. The other names are Carvana, KLAC, Ford, Cheesecake, Chipotle, eBay, and Qualcomm are Meta, Amazon, Google, Microsoft. So those are the priority. We're going to try to get all the results, but those are the four ones. 4:30 Google starts, so in 32 minutes. 4:30 to 5:30 we got Google. We're not going to have any time to discuss it because 5:30 Meta starts. 5:30, 6:30 is Meta. And then from 6:30 to 7, we'll stay on whoever's left and try to analyze everything we got. But that's what we got going on. Dude, I have some butterflies in my stomach. I'm like actually a little nervous here.
What's the TLDR on this FOMC meeting? Jerome Powell talk. Well, what bearish, bullish? Well, what was the tone?
It was really neutral. He didn't say anything.
Okay, so he could have sent an email. You're saying?
Yes, and he could have made markets worse, but he didn't say anything that markets cared about enough. So now it's up to, which I kind of like, because now it's up to these tech companies to do it. I will say this as well, as we have 1 minute left. Regardless of what happens to these stocks, up or down, regardless of what happens to our portfolios, up or down, I don't really believe in participation awards, but I would say that all of us here are winning for even caring about the markets, because at the end of the day, you could be doing something else right now. You could be watching Netflix. You could be, just not caring about your financial future. But the fact that we're all here, that we care about these four companies, that we cared about a guy wearing a purple tie speak for the last time on the Fed stage, means that we are interested in trying to do something greater than ourselves. And it is cool to be here together as a community. And hopefully we make a lot of money in the next 30 seconds.
PayPal is up 2.5% today, ladies and gentlemen. The end is near.
Based on the market today, if we, or not the market, based on the day that we've had, if I stay live till 6:55 or whatever, I will have been live for 10 hours today.
Wow.
It's been a long day.
Here we go. Wednesday, April 29th. The biggest companies in the world reporting at the exact same time, 4 p.m. The stock market is now closed.
Don't mute the bell. You can't mute the bell. The bell's awesome.
Can't mute the bell. And now we wait.
What did you guys say I was muted?
I got Qualcomm first. That one's down 2%. Qualcomm, Street wanted 10.2. They're guiding for 9.2 to 10 billion. That's on the guide. I don't have this quarter yet. Qualcomm, that's the first one I'm seeing before the rest. Qualcomm down 2.3. That's the first one. Qualcomm, EPS 265 versus 255. That's a beat. Adjusted EPS third quarter, 210 to 230. Street wanted 243. They missed on guidance for EPS. That stock now down 4%. That stock now down 4% on a miss on EPS guide. Oh, and a miss on rev guide. Street wanted 10.2. They came in at 9.2 to 10. So they missed on the guidance for rev and EPS. Meta goes down. No up. No down.
Amazon is down 5.something%.
No.
All right, guys. See you tomorrow. I'm out.
No.
Down 6.
Meta. Meta was down. Can it flip? Qualcomm down 3. Microsoft's up 1. Meta's trying to flip green. Meta's trying. Qualcomm down 4. Microsoft up 2. Microsoft's the winner so far. That one's moving. Google flat. Amazon EPS Street wanted $1.60. They came in at $2.78. That's a big beat.
Oh my gosh.
AWS 28% for AWS.
Dude, look at Meta's numbers. Oh, and Amazon's. Oh my gosh.
Okay, Meta's getting hit. Meta's down. Amazon,
EPS
unbelievable.
They were expecting $6.82. They got $10.44. Beat by 53%.
You're lying. 50%?
No, they beat by 53%. EPS is up 62% year over year, and revenue's up 33% year over year to $56.3 billion.
Some of these things don't make any sense. Like for Amazon, it's definitely a one-time tax benefits, and for Meta, it has to be the same thing. Because how can you beat like this?
I mean, maybe it is taxes, but if it's not 53%, they did erase capex, unfortunately. But again, with these types of beats, maybe they're allowed to. Meta capex is up to $145 billion, not 135. Nice. 125 to 145 instead of 115 to 135. Google capex 35 billion versus 36. Google revenue 109 versus 107. That's a beat. EPS beat 283 versus 263. Cloud revenue 20 versus 18. That's a beat.
Okay, Meta has a $8 billion income tax benefit that was recognized in the first quarter.
Okay, there you go.
Meta?
Yes, sir.
So they actually missed.
Well, we don't know yet fully. We'll have to do the numbers.
$8 billion tax benefit. That's so they should have gotten $2 billion. Oh no. Sorry. I was getting my numbers mixed up.
Google is the one that's winning. Meta down 5. Google again. Revenue, that's a beat on first quarter revenue 109, 107. They beat by 2 billion. Cloud 20 versus 18. EPS 282 versus 263. The Googs is at 367. Qualcomm's down 4.
There was another memory name that just reported after hours, Form Factor.
Google beat EPS by 94%.
But did Google have a benefit or anything? Is like SpaceX?
I assume so.
It's
they
either
all are having
benefits
insane
or
beat.
Anthropic stuff, no? Investments in other companies, whatever they do. But
oh yeah, could be long-term investments.
Yeah, guys, the 511 versus 2. The street doesn't get it that wrong. That's got to be again.
Yeah. But still, though, look at revenue. Revenue beat by 3%, 22% revenue year over year. That's amazing.
Meta makes no sense to me. I don't understand why that's dumping, but there's got to be something the street doesn't like.
Are you playing earnings?
No, I'm not playing it. I mean, technically, I'm in all of these, so yeah.
Okay, all right, no, all good.
But this is unbelievable. Amazon, why is that one also? I mean, I know the move was priced, but 5% on, or actually 2% on Amazon here was 5%. 259.
Meta increased capex, by the way. I mean, yeah, it's now in the range of 125 to 145 billion dollars, up from 115, 135.
Yeah, I like it better when you say it opposed to when Amit said it 5 minutes ago.
Yeah, Amit said unfortunately, and me and Jose were like, "What do you mean unfortunately?"
It made the stock go down. That's why it was unfortunate. Yeah. Here's Amazon.
It's pretty much flat. It dipped a little bit, but it is a beat on the top and the bottom line. Earnings per share coming in at $2.78 versus $1.64 the street was expecting. There is a $16.8 billion gain on its Anthropic stake, though. Revenue coming in at $181.52 billion versus $177.3 billion expected. Operating income guidance for the second quarter. This is what the street was really looking for. Amazon is guiding for between 20 to 24 billion. The street was expecting 22.65 billion. So that's sort of the midpoint of what they gave out. The stock, though, has now lower by about 3%. So we're going to continue to dig into these numbers and find out what the culprit is for the stock moving lower, although expectations had moved down on the quarter.
Did you guys see Google's cloud revenue growth?
No, what do we have? What do we got?
63%.
Oh my goodness.
Dude, look at this. This is ridiculous. Even search is growing at 19%. Tokens per minute are up 60% quarter over quarter. Paid subscriptions up. Waymo's doing well. 63.
The table.
$460 billion backlog. Oh my God, that's like double what it was last quarter.
Yeah, that was like 250 or something last time, right?
Oh my God, bro.
Cloud revenue 20 versus 18, YouTube 9.8 versus 9.9. They missed on YouTube. Capex 35 versus they actually missed on Capex, which is good. They were a little bit shy for Q1.
I'm telling you, Google is going to be such a giant. Like they already are, but like they are so well positioned to dominate in artificial intelligence.
Amazon. One good thing about Amazon, as Google keeps pumping, is operating margins are up 2%. Like that's really good. 11.7 to 13.1. That's a very healthy increase on their operating margins, which were at 5% a year ago. Physical stores 5.7 versus 5.8. Operating income 20 to 24 for Q2. Street wanted 22, so that's on the high end. It looks like they benefited from Anthropic as well because they beat EPS by like 80%. So all these companies getting some type of a pre-tax gain there.
Yeah, I wonder if that RPO was because of Anthropic, right? They announced the Anthropic
could be
expansion this quarter, and I was reading it said RPO doubled quarter over quarter, almost doubling, and I think that was the only big contract they had, unless they secretly are working with OpenAI, and we might hear about it soon.
This is what we have for Googs.
Versus the $107.2 billion estimate. EPS coming in at $5.11. At this point, we are not comparing that to the street estimate of $2.63. We've also got to read on Q1 cloud revenue. This is really a tell on whether that massive AI infrastructure push, especially on their in-house chips, the TPU, is paying off. That's coming in at $20.03 billion versus the $18.05 billion estimate. That is up 63% year over year, beating even the whisper number of 50% growth. Last thing I want to point out at this point, dividend, it's 5% increase to dividends, resulting in a 22-cent dividend for the quarter. Mel, I'm still digging into this for now. Shares up around 3.5%.
All right, Mac, thank you.
Microsoft, did they end up flipping red? No, but they lost their candle. Amazon ended up flipping a little green. Sam joining us. Any reaction to these numbers?
Man, at AWS 28%, I'm still looking through the numbers, but Google Cloud is insane.
I was going to say 28%. I mean, that pales in comparison to 63%. Somebody's taking market share here.
I mean, isn't AWS twice as big as Google? I mean, still,
Yeah.
that's pretty tremendous.
But sorry, can I bring up another little thing here? Meta dropped in terms of total members for the first time in I don't know how long.
That might. Do you have it right now?
Yeah, I can.
There is an explanation.
Okay, all right.
There is an explanation. They said it dropped slightly because of internet disruptions in Iran, as well as restrictions on access to WhatsApp in Russia. That said, ad impressions are up 19%. Average price per ad is up 12% year over year.
Can I just ask about the WhatsApp thing? That happened this quarter? That didn't happen over the Ukraine-Russia thing's been going on for a while. They're saying the WhatsApp thing happened right now?
I mean, if you want me to call Zuck and ask, I don't know.
Please.
I'm sure he'll talk about that on the call, but the Iran thing seems to be a bit more prevalent given there's 92 million people there. Revenue up 33% year over year. Expenses were up 35. Capex, again, increasing by about 20 billion. Probably part of the reason they did the headcount layoffs is because of this increase in Capex that we're seeing by 20 billion. Price per ad up 12%. Ad impressions up 19%. I mean, that is hard to do. Increase that by 19%. Mm-hmm. Maybe the increase in Capex and slight decline in users. Maybe that's it. That's your story for why Meta's down.
Sorry, did you cover Carvana and Ford yet?
No, we'll do that right now. Carvana's up 10, of course. Beat EPS by 8%, 169 versus 156. Revenue 6.4 versus 6.1, beat by 5%. Double beat. There you go. Carvana's up 10, even with a heavy short ratio. Net income margin 6.3, adjusted EBITDA margins at 10%. They sold about 187,000 cars.
Ford is up almost 7% as well.
Ford, wow. 66 cents versus 19 cents expected on EPS. Did they invest in Anthropic early too? Like, what is going on?
they pivoted to data center.
No, but every
Ford
company's
AI.
beating by like 200% on EPS.
Yeah.
Adjusted EBITDA 8.5 to 10.5. Street saw 8 to 10, so they beat on the adjusted EBITDA guidance as well. Oh, they got a tax refund. Okay, there you go. That explains it.
Yeah, the biggest tax refund in history just went to the corporation.
Microsoft down 3. Oh, did we even look at Microsoft's numbers? Is anyone? What did they do on revenue?
Not yet.
Oh, so none of us cared about Microsoft. The freaking
Dude,
what are we doing here?
Google Cloud operating income grew 154%.
Okay,
Crazy.
Microsoft beat on EPS by 5%.
Insane.
Beat on revenue by 2%. Street doesn't care that much.
What was their cloud?
That's a great
yeah, no.
question.
Let me
Try
try.
to
40%.
find that out. Was it actually 40 with a 4?
Yeah, Azure and other cloud services revenue increased 40%, 39% on constant currency.
Okay, so they met their cloud numbers. They didn't accelerate like AWS, but that's not bad, right?
Yeah, it's not bad, but they're all paling in comparison to Google Cloud right now.
Yeah.
And the operating margin that Google Cloud is actually seeing on their cloud too is also very impressive.
Yeah. It's amazing. They're massively growing their operating income compared to the other two.
Yeah.
Nebius getting hit after hours. Iren getting
that's
hit.
expected.
Wait, why? Why is that expected for Nebius?
I mean, just you have a lot of med caps going down, but I would say that.
Oh, but if they're increasing capex,
market's
that's
going
good,
down.
right?
No, but look at the market. Market's down, or the Qs are down 65 basis points after hours. So it's going to impact. I mean, ultimately, the guide is really going to tell the story for these data center stocks, but they might need to cool off a little bit.
Wow. So Google's the only one that survived it. Wow.
So when is Google flipping Nvidia for that number 1 spot?
Watch your mouth.
Oh,
Yeah.
there you go.
Wow.
I wanted to activate Jose a bit. He's been too quiet.
Dude, well, Meta, headwinds in the EU and US could significantly impact results. Headwinds about what?
The kids not being on social media is one thing.
Oh, the cyberbullying thing.
And the other thing is the EU making sure they make money from US companies by fining you billions of dollars every year.
It's their favorite.
Now, they're saying significantly impact results, but I think they also have to disclose that. This is a company that just grew 33%. Unless that goes down to 25% next quarter. I don't know how significant. Google's given up some of those gains, folks.
Yeah.
Google's joining the red party. Oh, boy. Amazon down 3.
So this kind of makes sense why Nebius is down a lot more from it is because they have the Microsoft deal and they have the Meta deal. Now, I'm just basing it on how those earnings are performing versus Google. So the fact that Google, Meta, and Amazon are down significantly. I mean, Amazon not really as much, but that explains why Nebius is down the most out of all of them. TeraWulf is only down 50 basis points, and they have the Google backstop. Iren is down 1%. So just a guess. But the Qs are down 80 basis points after hours.
It's a fair point. And by the way, Google's net income, $36.9 billion they got the benefit of, which is why they beat so heavily on EPS.
And by the way, I mean, the little disclaimer there from Meta at the end has been put there, I think, for the last couple of quarters. I checked too, and it was there already. So the usual stuff.
Yeah, so then capex, I guess, is the reason. Here's Microsoft's their earnings as well.
For Microsoft.
for the quarter, $627 billion. That is 99% year over year. So that's a big number. But I would point out it's a slower pace than the prior quarter, which RPO came in up 110% year over year. So something to take into account. And once again, as we look at those capex numbers, now the street was looking for $35 billion on capex in the third quarter. The company here is saying 31.9 for the third quarter, which is really interesting given the broader concerns around capex. Is it growing at a faster pace than Azure? We have comments here from CEO Satya Nadella of Microsoft. He says, we are focused on delivering cloud and AI infrastructure and solutions that empower every business to evaluate their outcomes in the agentic computing era. Reminder to our audience, Microsoft guidance comes out during the earnings call, which begins at 5:30 p.m. Eastern. He also points to one specific metric, AI business surpassing an annual revenue run rate of $37 billion. That's up 123% year over year. Guys, I'll send it back to you.
Seema, thank you. Let's bring in Brent Thill. He is Jefferies equity analyst, and his coverage includes Microsoft, Google, and Meta. Brent, great to have you. Let's just start with Microsoft there. What did you see? The market is just, backing off slightly. Obviously, we're getting a lot more detail on the call.
Yeah, Microsoft was largely in line. Azure hitting the high 30s, M365 mid-teens, capex kind of in line, and continued good operating margin improvement. So if anyone thinks you can't make money in AI, Amy Hood, the CFO of Microsoft, telling you that you can make money on AI and improve margin. So we continue to think that it's consistent, stable. They pulled a Wayne Gretzky and RPO up 99%, which is great to see. And I think it's pretty straightforward. I think the challenge is when you look at the Google backlog, up 90% sequentially, it looks like Google's taking market share across all these clouds.
That's kind of what you were saying, Tanner, as well. Kalak? Go ahead.
No, I was just gonna say Google's the only of the Mag 7 that's remaining green at all, but they're giving up all of it right now. They're at one point almost went red.
Kalak down 7. Form factor is up 15. Form factor this is kind of a memory play as well, right?
Yeah, that's Form.
Okay, so literally the market just cares about memory at this point. Did all these companies cure Alzheimer's or something? Like every memory stock, it doesn't matter.
Was that a joke? That was funny.
Thank you. I appreciate you acknowledging that. But
I get it. Smart man. That was good.
The chat's going to be upset because I used that joke 2 months ago, but not when you guys were live. So, you can recycle different. But I don't get it. Meta's growing 33%. They're spending a little bit on capex, but form factor catches the bid. I mean, this is Amazon accelerate AWS for the first time in 3 years, down 3%. I mean,
actually, they reaccelerated.
Sorry, reaccelerated. Yeah, because last quarter they accelerated again.
Yeah.
I can't even believe Google's not way more green. Google search is doing so well. YouTube ads are doing well. And Google Cloud's doing well. What else do you want?
Oh, how's the NVIDIA doing? It's not down that much.
Let's get the update from Meta.
A couple of key other factors to flag here. The company's revenue guidance for the second quarter is in a range of $58 to $61 billion. That's right in line with expectations, given the fact that the company reported higher than expected revenue in Q1. Perhaps a disappointment that it's not going to be growing consistently into Q2. Another keynote here, Reality Labs. This is the metaverse division, reporting a loss of $4.03 billion in the quarter. That is less than expected and smaller than the Q4 losses of $6 billion. And then one other note here is, so it looks like we maybe hit a peak in terms of Reality Labs losses. Daily active people actually decreased on a quarter-over-quarter basis and fell short of expectations. The company saying that was driven by internet disruptions in Iran, as well as a restriction on access to WhatsApp in Russia. So the company ending with 3.56 billion daily active people for the family of apps. Shares down about 6.5%. Melissa?
Julia, thanks. Julia Board.
Really quick, can I relay a message from Stephen Fiorillo?
Go ahead.
Because he's just texting me right now. He said, I just wanted to call to say Meta's price action is criminal. Zuck destroyed earnings Oh no, they're spending an extra 10 billion on capex. The stock market. These people are so stupid. He's pissed. He is pissed.
The soundboard was very effective there.
Yeah, that was really good.
Yeah.
Yeah, this is I think these will recover, obviously, but this feels like a rug. This feels like a rug right now.
Well, we do get CapEx guides during the call.
Well, we already got metas, right? I mean, I guess we'll
AWS you get during the call.
It doesn't
Microsoft during
matter.
the call.
Increased capex is bad. Decreased capex bad. Same capex also bad. So.
Yeah.
Well, I bought my ramen from the supermarket this morning, so it's probably gonna be sold out. So I don't need to worry about that.
I swear, though, Neil, that's actually what people are doing now, though. If any change, up, down, anything, they sell it off.
Oh man,
it's
Did
a
Qualcomm's
very
call start it?
no calls at 4:30 for Google. Qualcomm getting a little bit of a hit here. They missed on everything.
oh they weren't. No, they're up 5%.
No, they were down 5% before you came.
Yeah,
So that's a turnaround.
It's probably the OpenAI phone that nobody's going to use.
Maybe that's it. I mean, look, again, Qualcomm did not put up an Intel type of quarter that people thought they would. Not at all. Not even the slightest. So whatever the street's buying it for right now is got to be for some reason. But this is interesting. It's interesting to see Seagate and Bloom go crazy yesterday and NXPI. And then the companies that are spending all the money that benefits them. It's almost like Google, Meta, and Microsoft are piggy banks for these smaller companies. And these smaller companies are the ones that actually get their stocks to go up. And the bigger companies spending the capex don't get anything. It's
I want to share my screen. I'm just showing Google's long-term investments, which just went up an additional $40 billion quarter over quarter. $40 billion.
Is that mainly SpaceX and Anthropic?
Yeah, I mean, along with other things, but yes, that's a big part of it for sure.
At least Google's holding on to the pump. Like that cloud growth can't be denied, I would imagine.
I would like to eat steak tonight. I don't want to eat ramen.
Dude,
Amazon is,
the only steakhouse you're going to tonight is Texas Roadhouse. You're not going anywhere else.
That's a pretty good steakhouse.
Yeah, the bread is nice.
An affordable steak.
That's good. Amazon is only down 1.5%. So now it's, is this baby going to go green? Let's go.
Sundar Pichai, 2026 is off to a terrific start. Our AI investments and full stack approach are lighting up every part of the business. Search, a strong quarter with AI experiences driving usage, queries at an all-time high, 19% revenue growth. Google Cloud revenue grew 63% to $460 billion. Backlogs. This was our strongest quarter ever for our consumer AI plans driven by the Gemini app. Overall, the number of paid subscriptions has now reached 350 million. With YouTube and Google One being the key drivers, Gemini Enterprise has great momentum with 40% quarter-over-quarter growth. And finally, I'm pleased to announce we have 500,000 rides a week on Waymo. Mm-hmm. Gemini is now 16 billion tokens per minute. They didn't put how many users they have for Gemini in terms of monthlies. Which kind of leads me to think the number is not that compelling because usually they say that. Right? Like last time they said 650 million.
Yeah, they said Gemini Enterprise paid monthly active users is up 40% quarter over quarter.
I'm talking about the ChatGPT competitor. How many people are using that? I thought they would be closer to 800 million. So
I don't know. I recently just switched from Gemini back to ChatGPT. So,
our man.
They all have their strengths.
ChatGPT is so good now. Honestly, people clown on Codex, but with ChatGPT 5.5, it's amazing.
Even the image generation?
It's unbelievable.
Yep.
The new version of the image generator, it's the best.
Ridiculous.
I gotta check that one out. Yeah. I used to use Gemini a lot for image generation.
Yeah.
Okay.
Wow.
Qualcomm
10%.
If you put in the chat, if you actually picked this one up, but this is the winner today.
Let's see.
I can't see the quote on what they said that's getting the street to be this excited. I'm going to try to find the quote. But the numbers, we already read them, were misses on every metric. Street likes it, 9%. 9% on Mr. Oh, we got so many other earnings, dude. We didn't even look at them. Ford's up 2, Cheesecake's down 1, Chipotle's up 1, eBay's down 2.
eBay.
We looked at Carvana. Chipotle beat by 12% on revenue. They came in line on EPS. EPS is down 17% year over year. Viavi also had earnings.
Oh, yeah. How did that do?
That stock up 14. Revenue beat by 5%. EPS 27 versus 23. Revenue guide beat by about 30 million, which is really good. EPS beat by about 7 cents, which is also really good.
Stock talk is definitely one happy camper today.
Yeah, Viavi getting a nice little bid right there. The Qs are down 0.3. Corrigan, Nebius, and Iren still down.
I'm heavily contributing to Chipotle's revenue beat this quarter. So not as a shareholder, but as a customer. So you guys are welcome.
Thank you.
Let's get a little bit of...
I didn't know whenever you said that you were a chip investor that it also meant Chipotle.
Yeah. Using it for the AI data center pivot.
No, for the chips and guac, dude.
Yo, you're on fire today, dude.
Oh, Sam, did it take you that long to catch on to that joke?
It took me a while to catch on to that one.
He said AI data center pivot.
Yeah, I know, but you said chips and guac. I was like, wow, that was pretty good.
I mean, I think it's across the board. There's a skepticism that all this capex dollars is going to pay off in an ROI, and it's a greater focus on Meta. To your point, they're not among the top 3 hyperscalers running corporate workloads. So what are they using it for? They're using it for their ad business. They're using it for the future of their platform. When you think about interactive content, when you think about what they're going to do with the glasses. And I think the first wave of AI has paid off for Meta, and you've seen this, and you're not going to, you're seeing close to 30% revenue growth because that first wave of AI paid off with really good margin. I think the second wave of AI investment, everyone is freaked out. Is this just going to be wasted on new things that don't have the same magnitude of return as the core platform? And so I think that one still remains. There's a cloud over the stock. And ultimately, what's going to happen in the next gen of this AI build out is a bigger concern. And then the lawsuit. Clearly, we're seeing the lawsuit as an issue, and the user number I think is also somewhat of a red flag tactically. But again, I point to Q1s are never like insanely good for Meta. Only soft quarter for advertisers. They didn't seem like they put up a seasonally soft quarter in advertising. In Google beat by 2% in their ads business. So
right.
It wasn't that bad, but it was, I think, again, just the magnitude of the cap.
I agree. If this is a capex story, these stocks are going to recover. I wonder when, but this can't be something where Meta's going to drop below 600 tomorrow. Microsoft's going back below 400.
What waves is he talking about? To me, it's just been one constant blast of capex, but I don't know what waves he's referring to.
Yeah,
has there been waves of investment in data center spend?
No, it's a fair point, but the problem here is that the capex is up, but so is the revenue growth. So if the street's going to pick on, at least for Meta, users or like the lawsuits, which people cared about on March 30th, no one seemed to care about it when the stock went up after that. I think that's a silly reason to get upset. They grew 33%. What are we talking about? $2 trillion company doing that.
Yeah.
And what does this mean for NVIDIA if all these guys stay down? Is NVIDIA's down after hours, but are they just going to go to the moon because they get all the capex and the other Max 7s get nothing?
Curious to see what Broadcom is doing. Is that one moving?
Broadcom is up. Well, Google's up, so Broadcom should be up, right?
Marvell's down 1%.
Qualcomm's still climbing 13% right now.
Yeah, if anyone has the quote on Qualcomm, let me know, because
someone posted that they mentioned hold on, I have it really quick here.
I have something too.
Yeah, the leading hyperscaler custom engagement.
Yeah, Qualcomm is now 10% after saying its lead hyperscale custom silicon engagement remains on track for initial shipments later this year. CEO said he is confident smartphones rebound after fiscal 3. We can now call the bottom. So it's up 10% because they're saying smartphones will rebound after this quarter, basically. I mean, I guess that is a reason, but you're going to need a lot of smartphones to be sold, right? And their guidance is not implying a lot of smartphones are going to be. They missed on guidance. But I guess it's enough. Google is live. Here we go. All right, folks. We'll be back in an hour. Then we'll get into Meta, but here's Google.
Good luck.
Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's first quarter 2026 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Hi, everyone, and thanks for joining us today. It was a terrific quarter for Alphabet. Our momentum was on full display at Cloud Next last week, and the month of May brings even more with I/O, Brandcast, and GML. I hope you'll tune in to see our progress. It's clear that our AI investments and full-stack approach are driving performance across our business. In Search and Other, revenue grew 19%. People love our AI experiences like AI Mode and AI Overviews, and they're coming back to search more. Cloud accelerated again this quarter due to strong demand for our AI products and infrastructure. Revenue grew 63%, exceeding $20 billion for the first time, and our backlog nearly doubled quarter on quarter to over $460 billion. Gemini Enterprise is seeing tremendous momentum with 40% growth quarter over quarter in paid monthly active users. In subscriptions, this was our strongest quarter ever for our consumer AI plans, primarily driven by adoption of the Gemini app. Overall, the number of paid subscriptions has now reached 350 million, with YouTube and Google One being the key drivers. And our AI models have great momentum. Our first-party models now process more than 16 billion tokens per minute via direct API used by our customers, up from 10 billion last quarter. Today, I'll share our progress across the AI full stack, then Search and Cloud, followed by YouTube and other bets. Starting with our AI infrastructure, it's the foundation of our full stack approach to AI, driving customer growth and product adoption. Our custom TPUs, Axion CPUs, and the latest NVIDIA GPUs continue to form the industry's widest variety of compute options. NVIDIA GPUs are a core part of our AI accelerator portfolio and will be among the first to offer NVIDIA Vera Rubin NVL72 in addition to the Blackwell and Hopper-based instances already available. At Cloud Next, we introduced our 8th generation TPUs, individually specialized for training and serving, and able to take on the most demanding agentic workloads. TPU 8T provides high-performance model training with 3 times the processing power of Ironwood and 2 times the performance. TPU 8i delivers cost-effective, low-latency inference with 80% better performance per dollar than the prior generation. This exceptional infrastructure powers our world-class AI research that includes models and tooling which continue to progress really well. Gemini 3.1 Pro continues to push the frontier in reasoning, multimodal understanding, and cost. We have quickly expanded the Gemini 3.1 series of models to offer more choices for developers, including our cost-efficient flash models. 3.1 Flash Live, our latest audio model, has improved precision and reasoning, making voice interactions more natural and intuitive. It's now powering conversational features in Search and the Gemini app. Speech-to-text is now available in 70 languages. And with 3.1 Pro, our deep research agent got a big upgrade, including MCP support and native visualizations. Our generative media models are incredibly popular. Lyria 3 has generated over 150 million songs since launching on the Gemini app. Nano Banana 2 reached 1 billion images in nearly half the time of Nano Banana 1. And VO 3.1 Lite is our most cost-efficient video model to date. On top of this, we launched Gemma 4, our most intelligent open model. It's been downloaded over 50 million times in just a few weeks. In fact, our open models have now been downloaded over 500 million times. Looking ahead, we are focused on pushing the next frontiers of foundation models, including intelligence, agents, and agentic coding. And we are using the latest technologies to transform how we work as a company. For example, with anti-gravity, we are shifting to truly agentic workflows. Our engineers are now orchestrating fully autonomous digital task forces and building at a faster velocity. Much more to come here. Next, we are bringing helpful AI into the hands of billions of people every day through our products and platforms. Earlier this year, we introduced personal intelligence, which helps people get more personalized and helpful responses. It's now in the Gemini app, AI Mode, and Gemini in Chrome. Early traction has been good, and this month we integrated Nano Banana 2 to make personalized image creation possible in the Gemini app. Maps recently got its most significant upgrade in over a decade with Gemini. Users can now have a conversation with Maps and get more personalized suggestions and intuitive directions. And the Pixel 10a launched to positive reviews, providing the best of Google's AI features like Gemini Live and AI-powered camera features. Turning to search, AI continues to drive search usage and queries are at an all-time high. We continue to invest in improvements to AI overviews, which are driving overall search growth, and we're also seeing strong growth in both users and usage of AI Mode globally. Personal intelligence expanded broadly in the US, and we are seeing people ask more personal questions and getting responses that are uniquely relevant to them. We also shipped agentic experiences like restaurant booking to new countries and new multimodal capabilities like Search Live globally. We are also continuing to improve efficiency and speed. Even as we have brought new AI features into our results page, we have reduced search latency by more than 35% over the past 5 years. And since upgrading AI overviews and AI Mode to Gemini 3, we have reduced the cost of core AI responses by more than 30%, thanks to continued hardware and engineering breakthroughs. We are excited to share more about search at I/O. Now, over to Google Cloud. Google Cloud is differentiated because we are the only provider to offer first-party solutions across the entire enterprise AI stack. Our growth in revenue, operating margin, and backlog highlights this differentiation. Our enterprise AI solutions have become our primary growth driver for cloud for the first time. In Q1, revenue from products built on our Gen AI models grew nearly 800% year over year. We are winning new customers faster, with new customer acquisition doubling compared to the same period last year. We are seeing strong deal momentum, doubling the number of $100 million to $1 billion deals year on year, and signing multiple billion-dollar-plus deals. And we are deepening relationships with existing customers. Customers outpaced their initial commitments by 45%, accelerating over last quarter. At Cloud Next last week, we introduced hundreds of new capabilities across our vertically optimized AI stack that are designed to work together for our enterprise customers. We introduced a new Gemini Enterprise Agent platform that empowers users to build, orchestrate, govern, and optimize agents with the controls that enterprise customers need. along with new capabilities in Gemini Enterprise app like projects, Canvas, long-running agents, and skills. Every employee can build agents. In Q1, Gemini Enterprise paid monthly active users grew 40% quarter over quarter. That includes major global brands like Bosch, CityWealth, Merck, and Mars Incorporated. Our partner ecosystem plays an increasingly critical role in driving Gemini Enterprise adoption. We saw 9x year-over-year growth, both in seats sold with partners and in the number of partners adopting it for internal use. This momentum is leading to accelerating usage of our models. Over the past 12 months, 330 Google Cloud customers each processed over 1 trillion tokens. 35 reached the 10 trillion token milestone. To give agents business context from enterprise data to help them reason intelligently, we introduced a new agentic data cloud. It includes a cross-cloud lakehouse, knowledge catalog, and deep research agents, which combine research and analytical skills. As an example, using our data cloud, American Express is enabling agentic commerce at scale by moving an enterprise data platform along with hundreds of production applications to BigQuery. Vodafone is proactively resolving outages, automating network planning, and precisely targeting capacity. Enterprise data has become critical for agents to reason. Our strength with BigQuery and Gemini Enterprise has led Gemini-powered workflows in BigQuery to grow over 30x year over year. As cybersecurity threats from the use of AI models accelerate, our expertise in AI and cybersecurity is driving strong demand for our agentic defense offerings. In March, we closed the acquisition of Wiz, a leading cloud and security AI platform, which is an incredible fit for the moment we are in. We have seen tremendous interest from customers in our unique cybersecurity and AI products and services to protect their IT estate. The performance of Wiz so far has exceeded our expectations. Together with Google's threat intelligence, security operations, and AI models, Wiz is helping organizations detect, prevent, and respond to threats. We introduced new Gemini-powered agents for threat detection, continuous red teaming, and automated remediation to protect software code and cloud systems. Customers like Deloitte, Priceline, and Shell are using our agentic defense to strengthen their security posture. All of this is powered by the AI infrastructure I mentioned earlier. Our TPUs continue our leadership in performance, cost, and power efficiency for customers like Thinking Machines Lab, Hudson River Trading, and Boston Dynamics. As TPU demand grows from AI labs, capital markets firms, and high-performance computing applications, we'll begin to deliver TPUs to a select group of customers in their own data centers in a hardware configuration to expand our addressable market opportunity. Turning to YouTube, where our momentum continues. In the living room, US viewers are watching over 200 million hours of YouTube content daily. And as of March, we've reached a new milestone with over 10 million channels now publishing shorts each day. This level of daily activity is a testament to how people enjoy this content and how we have made it easier for creators. And in Q1, our YouTube Music and Premium offering saw its largest quarterly increase in the total number of non-trial subscribers, both globally and in the US, since YouTube Premium launched in June 2018. I hope you'll tune into Brandcast on May 13. Moving to other bets, Waymo is on a great trajectory. It launched in Nashville a few weeks ago. That makes 6 new cities so far in 2026 and operations in 11 major US cities in total. Waymo also surpassed 500,000 fully autonomous rides per week, doubling in less than a year. Wing continues to expand across the US in partnership with Walmart and DoorDash and announced plans to operate in the Bay Area. In summary, a terrific start to the year with so many great opportunities ahead. We are not slowing down. Huge thanks to all of our employees and our partners. See you at I/O on May 19th. Philip, over to you.
Thanks, Sundar, and hello, everyone. As usual, I start with the performance of Google services and then cover the progress we're delivering across search, YouTube, and partnerships. Google Services revenues were $90 billion for the quarter, up 16% year-on-year, primarily driven by the continued growth of search. Adding some further color to our results, search and other delivered 19% growth, primarily driven by retail and finance. YouTube advertising revenues grew 11%, driven by direct response, followed by brand. And network advertising revenues were down 4% year-on-year. Starting with search and other revenues, which delivered $60 billion in revenue for the quarter. We are accelerating the deployment of Gemini across our entire ads infrastructure to help businesses reach more customers in more places than ever before. This is driving significant improvements across all areas of marketing and continues to fuel new performance breakthroughs across 3 areas critical for our customer success: ads quality, advertiser tools, and new AI user experiences. First, ads quality. AI is boosting our ability to deeply understand user intent for a given search query and to find the most relevant ad. Even when we don't have a direct user query, we're making significant strides in improving relevance. In Discover, new AI models and classifiers are driving higher relevance by better aligning ads with unique user interests. In Maps, we're using Gemini to ensure promoted pins are deeply relevant to a user's surroundings, location of interest, history, and intent. This work is improving ads relevance by nearly 10%, leading to significant increase in user engagement. We're pairing this strengthened prediction-driven relevance with bottom-of-funnel precision. Over the past year, we've made over 20 improvements to search and shopping bid strategies. Smart bidding now uses Gemini to match user intent to an advertiser's product and services more accurately and further drive performance. This level of granularity was previously impossible to achieve at scale. Second, on advertiser tools, where Gemini helps advertisers drive more efficient and effective campaigns. People no longer search in fragments. They search conversationally and share more context. We launched AI Max to help advertisers adapt to this new way of searching, and earlier this month, it moved out of beta with improved performance quality across targeting and creative capabilities. Take Hilton EMEA. They captured 1/3 more clicks for 1/5 of the spend, while simultaneously increasing the average booking value by 55%. And Etsy saw a 10% search volume uplift, with 15% of those queries being net new to their business. We see significant opportunity as advertisers continue to make good progress on AI readiness and the adoption of AI tools. For instance, more than 30% of our customer search spend now uses AI-enabled campaigns, AI Max or Performance Max. And these advertisers are seeing more conversion for the same spend. Third, how we monetize new AI user experiences in search. We aren't just bringing existing ad formats into AI experiences. We are reinventing ads for this new era. Direct offers in AI mode are resonating with users and continue to receive positive customer feedback. Gap, L'Oreal, and Chewy are just some of the latest partners who have now signed up to test this Google Ads pilot. We're also exploring new formats for retailers. AI mode already surfaces organic product recommendations based on a user's query, and we're now testing a new ad format that displays retailers who sell those recommended products. In addition, the retail industry is rapidly coalescing around the open source Universal Commerce Protocol, or UCP, we launched in January in partnership with the ecosystem. Last week, we welcomed Amazon, Meta, Microsoft, Salesforce, and Stripe as new members to the UCP Tech Council. They joined founding members Shopify, Etsy, Target, Wayfair, and Google to further accelerate the transition towards an agentic future. Partners like Sephora and Macy's have joined companies like Ulta Beauty, who are already rolling out UCP and can now redefine consumer journeys from discovery to checkout. Ulta Beauty just last week launched agentic commerce within AI mode and search and the Gemini app. Shoppers can now review product recommendations, compare options, and complete streamlined checkout for eligible purchases directly within AI mode and Gemini. Turning to YouTube, which now has led streaming watch time in the US for 3 consecutive years. We're in an unmatched position to connect brands with the audiences they care about in the moment they engage in. We're applying Gemini to drive better matching and discovery between brands and creators of all sizes. And Gemini now powers YouTube Creator Partnerships, a centralized platform integrated directly into YouTube Studio for creators and Google Ads for advertisers. We've also made it easier to buy premium ad space in top-tier podcast shows by curating the most watched podcasts into popular genres. For example, Supergroup partnered with YouTube creator Lisa Koshy on a multi-format shorts and long-form CTV campaign, resulting in a 93% lift for their glow screen product and a 55% overall brand lift. Looking at monetization across YouTube, momentum continues in shorts and the living room, and demand gen continues to drive momentum in direct response, in particular with smaller advertisers. Brand 2 is benefiting from growth in the living room, where we continue to scale creator brand deals. YouTube subscriptions revenue continues to grow faster than ads, particularly YouTube Music and Premium. By the end of Q1, YouTube Premium Lite was fully launched in 23 countries, and we plan to launch in more than a dozen new countries in Q2. As always, I'll wrap with the progress we're seeing across partnerships. Retailers are increasingly looking to Google to support their AI transformation. This quarter, Kingfisher, Target, and Wayfair closed significant multi-year cloud and ads deals. Combined with the implementation of UCP, these partnerships will help deliver personalized, AI-driven agentic experiences from discovery to checkout. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always, our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the first quarter, unless I state otherwise. I will start with results at the Alphabet level and will then cover our segment results. I'll end with some commentary on our outlook for the second quarter and full year 2026. We had an outstanding first quarter, delivering our 11th consecutive quarter of double-digit revenue growth. Consolidated revenue reached $109.9 billion, up 22%, or 19% in constant currency. Total cost of revenue was $41.3 billion, up 14%. Tech was $15.2 billion, up 11%. Other cost of revenues was $26 billion, up 15%, primarily driven by increases in depreciation, content acquisition costs largely for YouTube, and compensation. Total operating expenses were up 24% to $28.9 billion. R&D expenses increased by 26%, driven by compensation due to investment in AI talent, as well as depreciation. Sales and marketing expenses were up 23%, driven primarily by marketing investments to support the Gemini app and search, as well as compensation. And G&A expenses increased 21%, primarily due to an increase in compensation and costs related to legal and other matters. Operating income increased 30% to $39.7 billion, and operating margin was 36.1%. Other income and expenses was $37.7 billion, representing a meaningful increase from the prior year, primarily due to unrealized gains in our non-marketable equity securities portfolio. Net income increased 81% to $62.6 billion, and earnings per share increased 82% to $5.11. We generated operating cash flow of $45.8 billion in the first quarter and $174.4 billion for the trailing 12 months. Capex was $35.7 billion in the first quarter, with the overwhelming majority of this spend in technical infrastructure to support the AI opportunities we see across the company. Approximately 60% of our investment in technical infrastructure this quarter was in servers, and 40% was in data centers and networking equipment. Free cash flow was $10.1 billion in the first quarter and $64.4 billion for the trailing 12 months. We ended the quarter with $126.8 billion in cash and marketable securities and $77.5 billion in long-term debt. And as we announced today, our board of directors declared a 5% increase in the quarterly dividend. Turning to segment results, Google Services revenues increased 16% to $89.6 billion, reflecting strong growth in search and subscriptions. Google Services revenues also benefited from a strong FX tailwind. Google Search and other advertising revenues increased by 19% to $60.4 billion, driven by growth in the retail and financial services verticals. YouTube advertising revenues increased 11% to $9.9 billion, driven by direct response advertising as well as brand. Network advertising revenues of $7 billion were down 4%. Subscription platforms and devices revenues increased 19% this quarter to $12.4 billion due to strong growth in both YouTube subscriptions, particularly in YouTube Music and Premium, and Google One subscriptions, which benefited from increased demand for AI plans. Google Services operating income increased 24% to $40.6 billion, and operating margin was 45.3%. The Google Cloud segment delivered outstanding results in the first quarter. Cloud revenues accelerated across all key areas and were up 63% to $20 billion. Revenue growth was driven by strong performance in GCP, which continued to grow at a rate that was much higher than Cloud's overall revenue growth rate. The largest contributor to Cloud's growth this quarter was AI solutions, driven by strong demand for industry-leading models, including Gemini 3. In addition, we had strong growth in AI infrastructure due to continued deployment of TPUs and GPUs, and core GCP continues to be a sizable contributor, driven by demand for infrastructure and other services such as cybersecurity and data analytics. Workspace again delivers strong double-digit revenue growth, driven by an increase in the number of seats and the average revenue per seat. Cloud operating income was $6.6 billion, tripling year over year, and operating margin increased from 17.8% in the first quarter of last year to 32.9%. Google Cloud's backlog nearly doubled sequentially, reaching $462 billion at the end of the first quarter. The increase was driven by strong demand for enterprise AI offerings and the inclusion of TPU hardware sales that Sundar referenced earlier. The majority of the backlog is related to typical GCP contracts, and we expect to recognize just over 50% of the backlog as revenue over the next 24 months. In other bets, revenues were $411 million, and operating loss was $2.1 billion. For the past few years, we have been working to prioritize our efforts and investments in the other bets. In Q1 of this year, Verily completed an external capital raise that resulted in its deconsolidation from Alphabet. G-Fiber announced plans to combine with Astound Broadband, which will result in its deconsolidation from Alphabet when the deal closes, which we expect to take place in Q4. And we continue to allocate significant resources to businesses where we see meaningful opportunities to create value, such as Waymo. Turning to our outlook, I would like to provide some commentary on factors that will impact our business performance in the second quarter and full year 2026. First, in terms of revenues, we're pleased with the overall momentum of the business. At current spot rates, we would expect to see an FX tailwind of approximately 1 percentage point to our consolidated revenue in Q2, compared to a 3 percentage points FX tailwinds in the first quarter. In Google Cloud, as Sundar mentioned, we will begin to deliver TPU hardware to a select group of customers in their own data centers. We expect to begin recognizing a small percent of the revenues from these agreements later this year, with the vast majority of revenues to be realized in 2027. It is important to keep in mind that revenues from TPU hardware sales will fluctuate from quarter to quarter, depending on when TPUs are shipped to customers. And finally, we're excited to welcome the Wiz team to Google Cloud with the closing of the acquisition in March, and are very pleased with the performance to date. A couple of items to highlight related to the acquisition. First, Wiz will be reported in the Google Cloud segment. And second, we expect a low single-digit percentage point headwind to Cloud's operating margin for the remainder of 2026 related to the acquisition. Moving to investment, we are updating our full year 2026 capex guidance range to $180 to $190 billion, up from our previous estimate of $175 to $185 billion, to now include investment related to the acquisition of Intersect, which closed in March. We are seeing unprecedented internal and external demand for AI compute resources. The investments we are making in AI is delivering strong growth, as evidenced by the record revenue and backlog growth in Google Cloud and strong performance in Google Services. Looking ahead, these strong results reinforce our conviction to invest the capital required to continue to capture the AI opportunity. And as a result, we expect our 2027 capex to significantly increase compared to 2026. In terms of expenses, as we've discussed previously, the significant increase in our investment in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expense, and related data center operations costs such as energy. We also expect to continue hiring in key investment areas such as AI and cloud, and are investing in marketing to support our AI products. To conclude, Q1 was an outstanding quarter for Alphabet, and our teams continue to execute with high level of discipline and velocity, delivering amazing innovation. We look forward to sharing more in the coming weeks at I/O, Google Marketing Live, and Brandcast. I want to take this opportunity to thank our employees for their contributions to our performance. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two. The first one, Sundar, on a recent podcast, you talked about how you were acutely constraining that compute, something you focused on almost every week to sort of make sure you're deploying capacity correctly. So let me ask you this: as you sort of look at the search business, what are the areas that you are most excited about applying next generation compute toward to sort of generate an ROIC on that return in search in the next 12 months? And then the second one is on the sale of the TPUs to third parties. Just can you help us philosophically understand the strategy around pricing them, given the high ROIC of using TPUs to power multi-year Google Cloud workloads a little bit? Thanks.
Thanks, Brian. I'll take the search one first. Obviously, you've seen we are taking advantage of all our investments in building the Gemini models, and both obviously applying it in search and the Gemini app, driving innovations in AI overviews and AI mode, and they're all contributing to the increased usage of the product. I do think looking ahead across both these surfaces, there is a massive opportunity to go deeper in what we do for our users. I think bringing agentic workflows to consumers in a way that it's easy for them to do, including in the context of search, I see as a huge opportunity ahead. And obviously, we are in very, very early innings of all that. And but our investments in our full stack of AI approach, I think, puts us in a good position to bring those experiences to search, and I'm pretty excited about it. On the second question around TPUs, obviously, we do think about it as what are we doing through Google Cloud to help our customers, and that's the framework with which we think about it. In that context, there are situations where it makes sense. For example, you take customers like capital markets, where they're running this, highly performant, AI workloads. They wanted, TPUs in their data centers. So there are, and those trends are true across a diverse set of industries, and in certain cases, frontier AI labs too. And so we are, opportunistic about it. But I do think we step back and think about it overall as the opportunity for Google Cloud. A lot of it is providing infrastructure through cloud. At times, it is direct sales of TPU hardwares to a select group of customers. But again, we do take ROIC approach, and some of it helps us get more economies of scale in our overall compute environment as well, and so helps us invest in the cutting edge, which we need to do the next generation as well.
Thanks, Sundar.
Your next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks so much for taking the question. One for Anat and one for Philip. Anat, you talked about 2027 capex, that it'll increase significantly, and I know you didn't quantify, but how do you think about the current capex trajectory's ability to service this massive backlog that you've built up in just the last quarter, and what will no doubt increase going forward? And then, Philip, can you just talk more about the drivers of search queries at an all-time high, and then how you're thinking about how much room there may be to increase coverage of search queries, just the ability to show ads against a higher percentage of queries than the 20% you've been at historically? Thanks.
Thanks, Doug, for the question. Let me start with your first question on the capex and how we think about capex increase going into 2027. So you've seen us over the past several years increase capex every year, and we have done it very thoughtfully to meet the demand that we are seeing both from external customers as well as demands across the organization. And you're seeing the proof point, the ROIC on that in terms of just the growth rate we're seeing, whether it's growth rate within search or certainly the cloud business and the opportunity we have within the cloud backlog. So as we're seeing that robust demand across the business, we are looking at what can we do to support that growing demand and the opportunity ahead of us. And increasing capex to meet that demand will provide more clarity in future earnings call about what that number will be. But that's the opportunity we're seeing ahead of us. It's quite meaningful, and we want to make sure we capitalize that and we do it in a way that's responsible, as we've done to date.
So on the second part of your question, first of all, just to zoom out for a second, I mean, we're very pleased with the performance of our ads business here. And as Anat shared, Google services benefited from a strong FX tailwind. That's important to keep in mind. The strength we saw in search was not due to a single driver, but was really the result of many parts of our business showing strength and working very well together. If I just deep dive for a second into the vertical perspective, retail, finance, I talked about it, and health drove the greatest contribution. Although all major verticals actually contributed, and we make hundreds of changes every quarter to improve the user experience, the advertiser experience, and so that's really contributing to our performance here. And we've also been able to generate very strong ads performance while significantly involving the search results page here. The queries continue to grow, and as Sundar mentioned, they are at an all-time high. We see AI overviews and AI mode continue to drive greater search usage and growth in overall queries, including in commercial queries. You specifically ask about the 20% on the coverage side. And as I said before, I think with the ability of AI to better understand intent and a lot of other vectors around it, I think there is upside in that coverage number. And overall, just the understanding that we have with Gemini on intent has just significantly expanded our ability to deliver ads on longer, more complex searches that were previously really difficult to monetize. And I shared earlier, we're deploying our Gemini models now across all of our ads infrastructure, and it's really driving improvements across the big three areas that I highlighted in my prepared remarks.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much for taking the questions. Maybe two, if I could. The first one, just building on the answer so far, when you look at the backlog you disclosed today, Sundar, I would love to know if you can come back to your comments on AI infrastructure and your unique approach and how that positions you to either build capacity, scale compute, and do it in a way that is, as Anat said, sort of effective from a margin standpoint as well as a compute standpoint, just to understand where you sit competitively in your mind relative to others. That'd be one. And then, Philip, to bring you into the conversation, you referenced UCP, and there's been a lot of industry inertia around UCP very quickly. Talk to us a little bit about what UCP means for the services business as agentic commerce scales in the years ahead. Thanks so much.
Thanks, Eric. Look, I do think I do think we are genuinely differentiated. We are unique in the market because of our vertically optimized AI stack and the way we co-develop the components from our infrastructure and models to platforms and the tools to applications and agents. And the fact that we own frontier models, own the silicon, really helps us stay ahead of the curve. And on top of it all, just to put an extra point on it, the deep investment in our security layers to keep everything safe. And I think we are the only provider in the market that offers all of these in a vertical stack. And so so overall, again, to my earlier comments to Brian, I think about it all as Google Cloud. we have many different ways to serve our customers, so we can meet them in a way suited to their needs. I think better than other players here. And I do think, looking ahead, our ability to invest in this moment and stay at the frontier, I think puts us in a strong position. And I think we are doing it based on tangible demand signals we are seeing. And it's not just on the revenue side, but I'm talking from a ROIC framework, and that's what is helping us navigate this moment responsibly.
And to the second part of your question, look, I mean, we're in the early stages of the agentic era. Agentic is more than just completing transactions. We all know this. We see agentic experiences as additive, and it will really transform how we shop from discovery to decisions, while helping, obviously, brands differentiate themselves. We've been very intentional about creating an agentic experience that works for our users, our partners, for the entire ecosystem. And our goal is really to remove the grunt work of shopping so consumers can focus on the enjoyable parts. For decades, you could either shop fast or smart. And I think with agentic commerce, you no longer have to actually choose between speed and certainty here. And the vision is to make commercial experiences across the board assistive, more personal, more fluid. And we're carefully designing space and agentic workflows for users to really see valuable components of their shopping journey beyond just price, such as customer service, brand loyalty, and more, while removing the friction of the process that I just talked about. And this is exactly where the part of your question kicks in, the Universal Commerce Protocol, a new open standard for agentic commerce that works actually across the entire shopping journey, from the discovery to the buying and the post-purchase support that we just talked about. And it was really co-developed with the industry leaders, including, I mentioned them, Shopify, Etsy, Walmart, and so on. And we've received tremendous feedback so far from hundreds of top tech companies, payments partners, retailers, really interested in integrating. And it will help power a new checkout experience in AI mode, in search, in the Gemini app, and allowing shoppers to actually check out from select merchants right as they're researching on Google and going through this journey. So we're very, very excited about it.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Yeah, just following up on the last question on agentic shopping. So it seems like we're at the point in time where this is actually going to start happening finally. So Philip, just to elaborate a little bit, as you look at carrying the AdWords business from kind of the old way of doing things to this new agentic frictionless shopping way, how do you see the price and volume kind of growth trends for core AdWords evolving as you start implementing more agentic workflows in search?
Look, our number one focus is obviously on the user experience here. And I think the most important part in this is what I mentioned before. We're carefully designing the space in the agentic workflows for the users to actually see the valuable components within that shopping journey. And the second you have the space, you obviously have the ability for interesting advertising models. I think it's also worthwhile noting that beyond just the traditional agents, there's a lot of additional ways we can actually use AI to improve the shopping experience. And you can think about it like our apparel try-on tools that is now available in the US. You can think about Google Lens. So there's a lot more to do here. But I think the key part is actually what I said before. We focus on the user experience here, and then I think all else will follow if we pay attention to the points I mentioned.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. One for Sundar, one for Philip. Sundar, if I can connect Brian's question, Eric's question, and go a little bit higher, I wanted to understand, how are you deciding, how are you allocating which divisions and projects get excess capacity given that you're constrained, right? So how do you decide between all the internal projects you have and the external projects, right? So what types of screens are you running to decide, who gets the incremental capacity? And then for Philip, I've noticed, and you said this on the Gemini app, there's more and more images that come to you in the shopping journey. Can you talk about your thoughts about adding advertising on that app, and what's guiding your decision making here on adding ads on Gemini? Thanks.
Thanks, Michael. I think great question, and on an ongoing basis, I'm looking forward to Gemini helping me more and more as I'm thinking that through. Look, I do think that the foundation where we start with it is what do we need from a R&D standpoint to develop models at the frontier. So what do you need for training these models, and so effectively the compute needed for GDM, because it's a foundation for everything we do, and so that's a core principle with which we operate. And then obviously, we with the ability to plan ahead, we do long range plans on our core areas, be it search, be it YouTube, and so on, as well as what we see in Google Cloud. And obviously in Google Cloud, we are providing enterprise AI solutions, which this quarter had a 800% year-on-year increase from the prior year. So we are seeing strong demand for Gemini Enterprise, our AI solutions there. We see strong demand for infrastructure in Google Cloud. And as I said earlier, in select cases, we are seeing demand for TPU hardware in others data centers as well. So we are modeling these out and working to allocate across these areas. Obviously, we are compute constrained in the near term, and as an example, our cloud revenue would have been higher if we were able to meet the demand. So we are working through that moment, and we are investing, but we have a robust long-range planning framework, and we see extraordinary opportunities ahead, and we are allocating with that framework in mind.
And to the second part of your question, as I said in my previous answer, we are obviously focused on the user first and creating a really great user experience with all of our product, especially our newer products. And specifically on monetization in the Gemini app, our focus right now is on AI mode. But it's fair to say that we really believe a format that works well in AI mode would transfer successfully to Gemini app. And so today in the Gemini app, we're focused on the free tier and subscriptions, and our AI plans were a sizable contributor to our Google One revenue growth. But let's also be clear, ads have always been a big part of scaling products to reach billions of people. And if done well, ads can be really valuable and really helpful commercial information. And at the right moment, we'll share any plans, as we have said, but we're not rushing anything here.
Thank you, guys.
Your next question comes from Mark Shmulik with AllianceBernstein. Your line is now open.
Yes, thanks for taking the question. Philip, one more on search performance, if I can. You talked a few times about kind of optimizing for the consumer experience. And I guess besides higher query volume, is it fair to conclude that consumers are using these AI tools, Google's or otherwise, and it's shrinking their purchasing journeys, converting at higher rates? And if so, is there a way to dimensionalize how much of the strength in search is being driven by that behavioral change against perhaps some of the newer advertiser AI tools that you've been launching and rolling out? Thank you.
I think the way to think about it is really to think about the expansionary moment we see here for search. This is the key part. AI is fundamentally changing how the world searches for and how it accesses information. Queries are at an all-time high. Sundar said this. Traditional search really started with 10 blue links, and now we have AI overviews in AI mode, and they have made search more intelligent than ever, and they let you ask far more complex questions. And we have Lens or Circle to Search, and we have Search Live. Search Live is now available to all countries and languages that support AI mode. Again, shows you the expansionary nature of it. And we have our AI-driven search campaigns, and we have now SMBs that can reach customers at a scale that it really wasn't possible even a few years ago. And you can add in Google Translate and so on. So I feel if you factor all of this in, we're in a pretty good place and are quite excited about where this is going.
Your next question comes from Ron Josey with Citi. Your line is now open.
Great, thanks for taking the question. Maybe this one is for Anat. We continue with margins continue to expand here. I wanted to understand maybe if you could break down the cost drivers or really the drivers of margin expansion, particularly amongst cloud. There's a thesis out there that AI revenues are
a lower margin in general, but we are seeing margins improve. So more insights on just the cloud business and what's driving that margin expansion. Obviously demand, maybe pricing, but that would be helpful. Thank you.
Sure. Let me help unpack the margin expansion. Obviously, we're pleased to see that there are pushes and pulls across the business, including within cloud specifically. And I would start with the top line. When we see this robust, strong revenue growth, both in cloud and Google services, it does provide leverage all the way down to the bottom line within the income statement. And we've been working hard to ensure we're running a productive and efficient organization. And it's not just how we operate the business, but even in areas such as our technical infrastructure, where we are investing these significant capex investments in our data centers and servers. We are looking at how we drive scientific process innovation within that organization. And that is reflected both in cloud and Google services as we allocate cost based on consumption. In the past, I did talk about the depreciation associated with these investments that is hitting both Google Cloud and Google services. Google Cloud expanded margin quite significantly from a year ago, as you've seen in our numbers that we've just previewed. And a lot of it is the top line growth that Google Cloud is providing or producing, as well as an incredibly efficient way of running the business. I will give Thomas and the team a lot of credit for running a very productive organization and making sure that we are supporting our customers and providing the services and products that they want and benefit from, continue to drive top line growth, and doing this well within the middle of the income statement, all the way from a very efficient technical infrastructure, thinking through how do we leverage AI across our business. Sundar mentioned the use of coding internally, or how Gemini helps us there at optimizing our real estate footprint. And we're going to continue to do this. We're not going to stop here. We're going to continue to push for more efficiency, knowing that we're going to have the headwind associated with the depreciation coming with higher capex level.
Thank you. Very helpful.
Our next question comes from Ken Gorowski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, please. First, on the cloud and capacity, could you speak about how your verticalized capabilities enable you to navigate a complicated supply chain, especially one experiencing inflation and constraints? Are you factoring any supply chain price inflation into 26 and 27 capex commentary? And as part of that, maybe not, could you update us on the allocation of compute capacity, internal versus external cloud? And then one more, please. When you think about search query volume growth, we're clearly seeing expanding use cases. Historically, it's always been free to the consumer with and completely ad supported. Do you see future use cases where certain consumer use cases are more effectively monetized via subscriptions, and maybe a different mix of the consumer quote unquote search, the new search opportunity? Thank you.
All right, Ken. Maybe there are a few parts to it. Maybe I'll touch on it. And on overall compute, I think I spoke earlier on how we think about allocation of compute across our businesses. And I think again, the long range planning and the ROIC frameworks give us a good way to plan ahead. I do think obviously we are working through a complicated supply chain environment, as you point out, and we are factoring that into any commentary we give. But I think the scale at which we are operating and our ability to work across all layers, both our supply chain partners see the strength of our diversified businesses and the demand we drive, and our frontier technology and the investments all through the stack. I think they help us get into deeper partnerships all across the supply chain. And I think that's, and I mentioned earlier, the economies of scale point as well. So all of that factors in a positive way there, I think. In terms of search, Look, I think we are proud that we build models at all. We are at the frontier across the Pareto frontier. We do think about capability and the cost frontier deeply, so that we can serve users at scale. But at the same time, we can bring in the most powerful models for the most demanding queries. But the future, as you are right, that in a valuable as we serve more and more valuable use cases, there are going to be use cases where people will want to use the most powerful model, and there may be different ways to accomplish that. So we're going to put the user first and support them in the way they want to use the product. And we are already provide various tiers of our subscription plans, in which you can get access to more powerful models, and that applies across your Google user experience, and including in search. And you've seen the momentum. We saw a very robust quarter in terms of our AI subscriptions growth. Driven by interest in getting access to better Gemini models, and so I think that sets us up well to serve the breadth of use cases people would want in all places, including in search.
Thank you.
And our last question comes from Justin Post with Bank of America. Your line is now open.
Great. Thank you for taking my question. I expect a lot of interest in your TPU sales. So can you help us think about how you're thinking about the opportunity there, and then maybe how much break down the backlog growth a little bit between TPUs and cloud? And then second question, just think about the margins on these big generative AI cloud deals. How do you think about these $100 billion deals coming in and the margins associated with those? Can they be similar to your cloud business as it is? Thank you.
Look, overall, I would say, look, we see tremendous interest in there's tremendous demand for both AI solutions as well as AI infrastructure, including massive interest in our GPU offerings as well as TPUs, and so we are proud that we can provide customers with a very diverse with the breadth of our offerings, and let them we can meet them in terms of where their needs are. And maybe I'll pass it to Anat to give some color on the backlog growth.
Yep. So the backlog, the TPU hardware agreements that Sundar referenced in his prepared remarks are reflected in our cloud backlog of the $462 billion. Although the majority of the backlog is still GCP agreements. Now, as you think about the total backlog, just over half of it will convert to revenue in the next 24 months. And the TPU hardware sales, more specifically, we expect a small percent of them to see coming through as revenue later this year, and then the majority to be realized as revenue in 2027.
And then anything on the big AI deal margins with the generative AI companies?
Look, I think nothing to comment on any specific contracts, but overall, earlier there was a lot of questions about how do we allocate. And remember, in a constrained environment, when we are choosing to allocate across all these opportunities, we are working off a robust ROIC framework.
Thank you.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining.
Okay, that is the Googs. Street likes it. 375 after hours. Meta should be starting in a second. Any quick thoughts from you guys on Google?
Few constrained, and they increased capex. They mentioned for 2027 is going to be meaningful higher. So I thought that was crazy for them to tell us that on Q1 of 2026 that 2027 capex was going to be higher than 2026. I think it's a big win for AI investors.
Yeah, the train's not slowing here. It's pretty freaking incredible, actually. Like, Google's so well positioned in advertising, artificial intelligence. If they want to move ads into Gemini, they can. Like, they just have a ton of flexibility. So, yeah, they're very well positioned. But now, hopefully, literally, Meta and Google are the exact same price, but one's negative and one's positive. They're both either up or down 6.74%. Like they're tied right now, but on the opposite sides. So hopefully Meta can turn around on their call. But yeah,
Their call's at right now.
Right now.
Okay.
All right, here's Meta.
The Meta Platforms first quarter 2026 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our annual report on Form 10-K filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.appmeta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining today. We had a strong quarter for our community, our business, and our progress towards AI. More than 3.5 billion people use at least one of our apps every day. We saw a small decrease in total family dailies due to internet outages in Iran and blocks in Russia, but otherwise trends across our apps are strong. Daily and monthly actives on Instagram and Facebook continue to grow, with video driving all-time high engagement across both apps. WhatsApp continues to see strong momentum too, including in the US, and Threads continues on its trajectory to be the leading app in its category. Our biggest milestone so far this year has been the release of our Muse family of models and our first model, Muse Spark, along with a significantly upgraded new version of Meta AI. This was the first release from Meta Superintelligence Labs, and it shows that our work is on track to build a leading lab. Over the past 10 months, we have built the strongest research team in the industry and established the scientific and technical foundations to scale very advanced models. Spark is just one step on that scaling ladder, and we are already training even more advanced models. But Spark has already made Meta AI a world-class assistant that leads in several areas related to our vision of personal superintelligence, including visual understanding, health, shopping, social content, local, creating games, and more. We're hearing very positive feedback on it so far. We've seen large increases in Meta AI use since releasing the updates, and the Meta AI app has consistently been near the top of the app stores as well. Now that we have a strong model, we can develop more novel products as well. Since I first wrote about our vision for personal superintelligence last year, we've been focused on delivering personal and business agents to billions of people around the world. Our goal is not just to deliver Meta AI as an assistant, but to deliver agents that can understand your goals and then work day and night to help you achieve them. My view of AI is very different from many others in the industry. I hear a lot of people out there talk about how AI is going to replace people. Instead, I think that AI is going to amplify people's ability to do what you want, whether that's to improve your health, your learning, your relationships, your ability to achieve your personal career goals, and more. My view is that human progress has always been driven by people pursuing their individual aspirations, and I believe that this will continue to be true in the future. People will be more important in the future, not less. Meta believes in empowering individuals, and those are the kinds of products that we're going to build, and I believe that they're going to be some of the most important and valuable products of all time. We are building a personal agent focused on helping people achieve the diverse goals in their lives. We're also building a business agent focused on helping entrepreneurs and businesses across the world use our tools and others to grow their efforts, reach new customers, and serve existing customers better. These agents will work together to form an ecosystem. And whether you use our personal or business agents to achieve your goals, I believe that the future will see a massive increase in entrepreneurship from people creating new things that they've always wanted to exist, but previously didn't have the tools to bring into the world. We're already testing an early version of business AIs, and weekly conversations have grown 10x since the start of this year. We're also working on using Spark in our upcoming models to improve our recommendation systems and core business in Facebook, Instagram, and ads. Right now, our apps primarily help people accomplish three important goals: connecting with people, learning about the world, and entertainment. But we've always wanted our apps to understand more of people's goals so we can help improve their lives in all of the ways that they want. These new AI models will let us understand this in more detail. So instead of just looking at statistical patterns of what types of people engage with what content, for the first time in Meta's history, we're going to be able to develop a first principles understanding of what you care about and what each piece of content in our system is about, so that way we can show you more useful things for what you're trying to accomplish. And we'll also be able to create personalized content specifically for people to help you achieve your goals as well. Since our recommendation systems are operating at such large scale, we'll phase in this new research and technology over time. But the trend over the last few years seems clear, that we are seeing an increasing return on the amount that we can improve engagement for people and value for advertisers. This encourages us to continue investing heavily in what we expect will provide increasing value over the coming years as well. On that note, we are increasing our infrastructure capex forecast for this year. Most of that is due to higher component costs, particularly memory pricing. But every sign that we're seeing in our own work and across the industry gives us confidence in this investment. That said, we are very focused on increasing the efficiency of our investments. And as part of that, we are rolling out more than 1 gigawatt of our own custom silicon that we're developing with Broadcom, as well as significant amount of AMD chips to complement the new NVIDIA systems that we're rolling out as well. One of the primary goals of our Meta Compute initiative is to lead the industry in efficiency of building compute. And we expect that will be a strategic advantage over time. Talking about building physical goods at scale, our AI glasses continue to perform well with the number of people using them daily tripling year over year. This continues to be one of the fastest growing categories of consumer electronics ever. We released Ray-Ban Meta Optics this quarter, designed for all-day wear rather than primarily as sunglasses. And building on our release of Oakley last year, we have some exciting new partnerships and styles that I think are going to have the potential to reach even more people coming later this year. All of our glasses are designed to easily update to use our newest AI models and features. I'm also really excited to see the glasses evolve from being able to answer questions to being able to be a personal agent that's with you all day long, helping you remember things and achieve your goals. Beyond glasses, I am excited for more of our metaverse efforts to be powered by the AI models we're training as well. We remain the biggest investors in the VR space across the industry, but we are focused on making our VR business sustainable as we invest more in other areas like AI and glasses. Before wrapping, I want to talk for a moment about how AI is transforming our work. We are seeing more and more examples where 1 or 2 people are building something in a week that would have previously taken dozens of people months. And I want to make sure that Meta is the best place in the world for these types of people to come and make an impact. We're building the next evolution of our company around these people. And there's a lot that we can do to enable this. Building the best infrastructure for creating and delivering products at scale, streamlining our teams so they aren't bigger than they need to be, recognizing and rewarding the people who are having outsized impacts, and setting ourselves up to try many more ideas and take on many new projects in the future. Of course, we will continue pushing to increase our efficiency as well, but overall, I think the future is about building many more higher quality things than we've ever built before. All right, that is what I wanted to cover today. We are living through a historic technological transformation. We are among the few companies positioned to shape the future, and we are on track to do that. I'm looking forward to delivering personal superintelligence to billions of people. And as always, I am grateful for the hard work of our teams and to all of you for being on this journey with us.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis unless otherwise noted. We estimate 3.56 billion people used at least one of our family of apps on a daily basis in March, which declined slightly from December due to internet disruptions in Iran and a restriction on access to WhatsApp in Russia. Absent these impacts, growth in family daily active people would have been positive quarter over quarter. Q1 total family of apps revenue was $55.9 billion, up 33% year over year. Q1 family of apps ad revenue was $55 billion, up 33% or 29% on a constant currency basis. In Q1, the total number of ad impressions served across our services increased 19%. Impression growth was healthy across all regions, driven primarily by growth in engagement and users, as well as ad load optimizations. The global average price per ad increased 12% year over year in Q1, with broad-based growth as we benefited from ad performance improvements, better macro conditions versus Q1 of last year, and currency tailwinds in international regions. This was partially offset by strong impression growth, including from lower monetizing regions. Family of apps other revenue was $885 million, up 74%, driven primarily by WhatsApp paid messaging and subscriptions revenue. Within our Reality Labs segment, Q1 revenue was $402 million, down 2% year over year due to lower Quest headset sales, which were partially offset by continued strong growth in AI glasses revenue. Moving now to our consolidated results. Q1 total revenue was $56.3 billion, up 33% or 29% on a constant currency basis. Q1 total expenses were $33.4 billion, up 35% compared to last year. Year-over-year growth was driven mainly by infrastructure costs and employee compensation. The growth in infrastructure costs was due to higher depreciation, data center operating costs, and third-party cloud spend. The growth in employee compensation was driven by technical hires we've added over the past year, particularly AI talent. We ended Q1 with over 77,900 employees, down 1% from Q4, as the impact of headcount optimization efforts in certain functions was partially offset by hiring in priority areas of monetization and infrastructure. First quarter operating income was $22.9 billion, representing a 41% operating margin. Q1 interest and other income was negative $1.1 billion, driven by unrealized losses on our equity investments. Our tax rate for the quarter was negative 23%, which was favorably impacted by a tax benefit of $8.03 billion. This benefit partially relieves the $15.93 billion non-cash tax charge we recorded in the third quarter of 2025, which reflects updated guidance from the U.S. Treasury issued in February 2026 regarding the tax treatment of previously capitalized R&D expenditures in the United States. Absent the tax benefit, our Q1 tax rate would have been 14%. Net income was $26.8 billion, or $10.44 per share. Absent the tax benefit, our net income and EPS would have been $18.7 billion and $7.31, respectively. Capital expenditures, including principal payments on finance leases, were $19.8 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $12.4 billion. We ended the quarter with $81.2 billion in cash and marketable securities and $58.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're continuing to see significant gains from our content recommendation initiatives. On Instagram, the ranking improvements that we made in Q1 drove a 10% lift in Reels time spent. On Facebook, total video time increased more than 8% globally in Q1, the largest quarter-over-quarter gain in 4 years. Within the US and Canada, ranking improvements we made drove a 9% increase in video watch time on Facebook in Q1. These gains are benefiting from advances we're making across the full stack. Starting with data, we doubled the length of user interaction sequences we use for training on Instagram in Q1 and increased the richness of how each user interaction is described, enabling our systems to develop a deeper understanding of user interests. Within our models, we've significantly increased the speed with which our ranking models index new posts, which is enabling us to recommend them sooner after they are published. We're also applying more advanced content understanding techniques, which is enabling us to quickly identify posts that may be interesting to someone, even if they haven't engaged with a lot of similar content. These and other improvements have enabled us to increase the diversity and recency of recommended content, with same-day posts now representing more than 30% of recommended reels on both Instagram and Facebook, more than double the levels 1 year ago. We're also using AI to unlock more inventory by auto-translating and dubbing videos into a viewer's local language, enabling us to recommend a more diverse set of content. Over 500 million users on each of Facebook and Instagram are now watching AI-translated videos weekly. Looking forward, we're making several investments we expect will deliver more valuable recommendations. This year, we will continue scaling up our models in several dimensions, including their size and complexity, while incorporating LLMs to deepen content understanding across our platform. This will enable us to better match people to a wider variety of content aligned to their interests. At the same time, we are executing on our longer-term efforts to develop the next generation of our recommendation systems. This includes building foundation models that power organic content and ads recommendations, as well as developing LLM-based recommender systems. Our focus this year is validating the model architectures and techniques in these domains before we scale them out in future years. Aside from our recommendations work, we are focused on deploying the models from Meta Superintelligence Labs to enable a new set of product experiences. We're seeing encouraging results within Meta AI since we began powering responses with the first model from MSL, Muse Spark. In tests we ran leading up to the launch, we saw meaningful engagement gains that accelerated week over week with each new iteration of the model. We're seeing similar gains within Meta AI following the broad rollout of our new model, with double-digit % increases in Meta AI sessions per user. Muse Spark is now powering Meta AI in direct chat threads across our family of apps, as well as the standalone Meta AI app and website, giving billions of people globally access to our latest model. Overall, we're very encouraged by the momentum within our research and product roadmap, and look forward to sharing more detail on what we're building over the course of the year. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here we continue to enhance our systems to show ads at the optimal time and location. In Q1, we also expanded availability of ads on our newer surfaces, including bringing ads on Threads to people in more markets. On WhatsApp, we're making good progress with the rollout of ads in status, with hundreds of millions of people now viewing them daily. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our services. To do so, we're deploying AI more deeply across each layer of our systems and tools. Within our ad systems, we're delivering performance gains as we deploy more complex and predictive models. In Q1, enhancements we made to Lattice's modeling and learning techniques, along with advances in our GEM model architecture, drove a more than 6% increase in conversion rate for landing page view ads. In addition, we've been investing in more performant inference models for when we're serving ads. In the second half of last year, we began rolling out our new adaptive ranking model, which is an LLM scale ads recommender model that we use for inference. This model improves our inference ROI by routing requests to more compute-intensive inference models when it determines there is a higher probability of conversion. In Q1, we expanded coverage of our adaptive ranking model to support offsite conversions, which drove a 1.6% increase in conversion rates across the major surfaces on Facebook and Instagram. We're also leveraging AI to make it easier for businesses to manage their customers, develop ad creative, and engage with customers. The Meta AI Business Assistant has now been fully rolled out to all eligible advertisers on supported Meta buying surfaces, providing personalized recommendations to advertisers resolving account issues, and servicing campaign insights to help optimize results. Performance has been strong since we began testing the assistant in Q4, with common account issues being resolved at a 20% higher rate. This week, we're also introducing Meta Ads AI connectors in open beta, providing advertisers the ability to connect their Meta ad account directly to an AI agent. We've always supported advertisers both on our platform and through tools like the Marketing API. And now we're extending that to AI so businesses and agencies can analyze and optimize campaigns with the tools they're already using. Usage of our ad creative tools is also scaling, with more than 8 million advertisers using at least one of our GenAI ad creative tools, and particularly strong adoption among small and medium-sized advertisers. These tools are benefiting performance as well, with advertisers using our video generation feature seeing more than 3% higher conversion rates in tests. We're also seeing good traction in using AI to facilitate customer engagement. In Q1, we expanded business AIs on WhatsApp to SMBs across Latin America and Indonesia, as well as on Messenger in Asia Pacific. We now have more than 10 million conversations each week being facilitated through business AIs, up from 1 million at the start of the year. We'll further expand access to more countries this quarter while adding more capabilities to the AIs. We also continue to invest in the value optimization suite, which helps advertisers maximize their return on ad spend by prioritizing the highest value conversions, rather than optimizing solely for the most conversions at the lowest cost. Adoption by businesses has been strong following performance improvements we've made over the past year, with the annual revenue run rate of our value optimization suite now over $20 billion, more than doubling year over year. Last, I want to touch on our commerce efforts. People discover products on our platforms through ads and organic posts, with brands increasingly turning to creators to promote their products. This is contributing to rapid growth in our partnerships ads product, with its revenue run rate more than doubling year over year in Q1 to $10 billion. To support the product discovery and purchasing happening through creators, we're expanding our solutions beyond ads. Last month, we rolled out our affiliate partnerships offering on Facebook to more test partners so creators can tag products from participating retailers on their posts and earn a commission when someone makes a purchase. We have also started testing similar experiences on Instagram. We see a real opportunity to help people more easily discover and buy products within our services, particularly as we incorporate AI deeply across our platforms. Next, I would like to discuss our approach to capital allocation. Compute is becoming increasingly important as it determines the quality of services we can provide, including powering more capable models and delivering innovative new products. It is also becoming more critical to how we work at Meta, as we are entering a world where employees are managing agents to help them generate new ideas, run experiments, execute tasks, and build products. We are investing aggressively to meet our infrastructure needs and ensure we maximize our strategic flexibility over the coming years. This includes substantially expanding our own data center footprint and striking deals throughout the supply chain to secure necessary components for future capacity. We're also signing cloud deals that will come online over the course of this year and 2027, allowing us to scale more quickly. These multi-year cloud deals and our infrastructure purchase agreements drove a $107 billion step up in our contractual commitments this quarter. Our investments will support our training needs for future models and, most importantly, provide us the inference capacity necessary to deliver personal and business agents to billions of people around the world, along with several other AI product experiences we're developing. As we grow our infrastructure spend, we remain committed to operating efficiently, and we recently shared internally that we plan to reduce the size of our employee base in May. We believe a leaner operating model will allow us to move more quickly while also helping to offset the substantial investments we're making. Moving to our financial outlook, we expect second quarter 2026 total revenue to be in the range of $58 to $61 billion. Our guidance assumes foreign currency is an approximately 2% tailwind to year-over-year total revenue growth based on current exchange rates. Turning to the expense and capex outlooks, We expect full year 2026 total expenses to be in the range of $162 to $169 billion, unchanged from our prior outlook. We continue to expect to deliver operating income this year that is above 2025 operating income. We anticipate 2026 capital expenditures, including principal payments on finance leases, to be in the range of $125 to $145 billion, increased from our prior range of $115 to $135 billion. This reflects our expectations for higher component pricing this year and, to a lesser extent, additional data center costs to support future year capacity. Absent any changes to our tax landscape, we expect our tax rate for the remaining quarters of 2026 to be between 13% and 16%. Finally, we continue to monitor active legal and regulatory matters, including headwinds in the EU and the US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have additional trials scheduled for this year in the US, which may ultimately result in a material loss. In closing, Q1 was a solid start to the year with strong execution across our core ads and engagement initiatives. We're also making exciting progress on our AI research and product efforts and expect to build that momentum over the course of this year. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my question. Mark, I wanted to ask you just about the level of investment you're making and sort of the signposts you're watching to ensure you're going to generate ROIC on all these investments behind Muse and the other products. So if you could just sort of let us know some of the key factors you're watching over the next 12 to 24 months, whether it's Meta AI, Muse advances, core algorithm. What are you sort of watching for most just to make sure that you're on the right path to generating healthy ROIC on all this capex and infrastructure spend?
That's a very technical question for, basically where the things that we're watching are to make sure that we're on track building leading models and leading products. The formula for our company has always been build experiences that can get to billions of people and focus on monetizing them once you get to scale. I think we're seeing a little bit of that here, where basically we invest in advance to build leading models, then we convert that into leading products, and then we think that these are going to be some of the most important products that get built over the next decade. So I think just like anything else that we've done over time, the basic milestones that I look at are around, first, technically, are we delivering the quality to enable a great product? Then second, when you have the product, how is it scaling? And then third, you look at the monetization and then you drive up the efficiency of it towards increasing profitability. I don't think we have a very precise plan for exactly how each product is going to scale month over month or anything like that. But I think we have a sense of the shape of where these things need to be. And I think if you look at the usage of these and the quality of the products and the quality of the models that are out there and the use that other frontier models are getting and the trajectory of that, I'm quite comfortable that the lab that we're building is on track to be a leading lab in the world. I think Muse Spark was a very high quality model. It powers Meta AI, which I think is now a world-class assistant. We have an ability to be able to grow that and have a large amount of engagement. And over the coming quarters, we're just going to be tracking how do our next set of training runs go, how do our products scale, how excited are we about the products in the pipeline, where right now we're very excited. And then we'll also ramp up monetization over that period of time as well. So I think that those are the set of things that I look at. I think for the kind of specific financial questions, I think Susan can jump in if there's anything more to add.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thanks for taking the questions. Mark, I guess now that we've got Muse Spark kind of out there launched, how are you thinking about the team's focus here, kind of divided onto further model training runs and kind of further specialization and that personal intelligence goal, versus product launches and kind of shipping more product out the door? And Susan, I guess kind of as a follow-up to Brian's question, I know it's too early to discuss 2027 capex, but we've had peers mention tonight a potential significant step up. Any way to think about dimensionalizing kind of how we think about some of the returns or traction this year and how it might affect 2027 spend? Thanks.
I mean, I think the roadmap from the team has been pretty consistent. So we have the research team, which is focused on scaling increasingly intelligent models with capabilities for the specific things that we're focused on, which are business and personal agents. So we just released our first model, and I talked about in my comments how we're climbing this scaling ladder towards greater capabilities and scale for the models. That work continues. We have our next set of more advanced models in training now, and that is that work will, I think, just continue. I mean, that's a loop. I don't think we're going to be done with that anytime soon. We're going to have teams that are just consistently focused on training more intelligent and more capable models in the ways that we want. Then we have our product team, and that team is now really unlocked to be able to build things on top of our models because we now have very strong models. So before this, we had been prototyping a bunch of things using other different models, whether it was our previous older models or kind of using the APIs from other companies. And now we're unlocked to be able to go build things and get them to scale on top of our own models. So I think you will see that over some period of time. I tried in my opening remarks to give a bit of a sense of where we're going, but I think that more of the details of that will become clear over the coming months. And I think that these are just both loops that we'll iterate on. We'll keep on iterating on the intelligence. We'll keep on working on building new products and scaling the products. And then as we get to product market fit, we're also going to increasingly focus on building the businesses around them and decreasing the costs. And this is kind of how we've done everything over the last 20 years of running the company. And that is basically the plan.
Mark, on your second question, we aren't providing a specific outlook for 2027 capex, and we are frankly undergoing a very dynamic planning process ourselves as we're working through what our capacity needs will be over the coming years. Our experience so far has been that we have continued to underestimate our compute needs, even as we have been ramping capacity significantly. As the advances in AI have continued and our teams continue to identify compelling new projects and initiatives, and now too there are very compelling internal use cases. So our expectation is that compute will become even more central to the business going forward, and it will be critical to determining the quality of the models we develop, the types of products we can introduce, how productive we can be as an organization. So we're going to continue building out our infrastructure with flexibility in mind. And if we end up not needing as much as we anticipate, we can choose to bring it online more slowly or reduce our spending in future years as we grow into the capacity that we're building now.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe if I can build out on one of the topics that was discussed in the prepared remarks, but just the opportunity set that sits in front of the company with respect to putting agentic compute in front of both consumers and enterprises. You've long been associated with sort of the consumer landscape, and I am curious about how you're thinking about extensions of the media engagement parts of your business model and the commerce parts of the business model to become more agentic over time. But what do you see also as the opportunity set that sits in front of you across SMBs and enterprises where historically you maybe haven't had as much product velocity? Thanks so much.
Hello.
Thanks, Eric. So I would say, in the near term, obviously the sort of biggest focuses are
They
some
heard
of
you,
the
Tanner.
mentioned around deepening sort of engagement, obviously with our existing community and user base, making ad experiences meaningfully more personalized, more engaging, more valuable, helping SMBs find and engage with customers across our platform. Those are some of the, I think, most intuitive and adjacent opportunities to the business that we have today. And then, of course, as we are able to build out more agentic capabilities, enabling agents to help people be more productive, but also agents for businesses, and enabling, frankly, those agents to interact with each other, and build what we hope will be a thriving commerce ecosystem on our platform. So, I would say some of these are a little bit further out, especially in that latter category of things. Again, the focus is on building personal super intelligence, building a consumer agent that can work for you and help you get things done. That right now is a consumer experience that we're focused on, but we think there will be clear monetization opportunities over time. You can imagine commission structures or a premium offering. And on the business side, we're seeing a large opportunity, of course, around agents and scaling our business AI initiatives. I think I mentioned earlier in my remarks that there are over 10 million weekly conversations between people and business AIs on our messaging platforms. That's up from 1 million at the start of the year, and we're going to continue expanding globally in Q2. And business AIs today are currently free for most businesses on our messaging apps. But as we make more progress, we expect that we will also work towards establishing a longer-term monetization model, and we'll also consider other services that we can offer to businesses in the future. But we don't have anything more to share today.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great. Thank you very much for taking the questions. Maybe one for Mark and one for Susan. Mark, Ray-Ban Oakley AI glasses continue to perform really well for you guys, but EssilorLuxottica owns and manages a lot more brands. What are the gating factors to see the launch of additional glasses under these other brands this year, and what would be a successful year for you as you look back at 2026, maybe in terms of units sold? And then Susan, on that 10% RIF, how much of that is due to efficiencies for maybe AI implementation versus just the need to stay fit? And as you look at your employee needs over time, how do you see that growing maybe relative to your overall top line growth? Thank you very much.
I can go ahead and take both of those. I might answer your second question first. And I'm just trying to make sure I got all of the parts of the question. So in terms of what these sort of, kind of the optimal size of the company, I think over time, we don't really know what the optimal size of the company will be in the future. I think there's a lot of change right now with AI capabilities advancing rapidly. We're very focused on leveraging AI tools to substantially increase our productivity, and we're seeing that reflected in the accelerating output from our engineers. And we're generally approaching this with a bias toward wanting to use these tools to build even more products and services than we would have before. At the same time, we're making very significant investments in infrastructure, and we are very focused on continuing to operate efficiently. So I think we will be continuously evaluating how we're structured just to make sure we're best set up to deliver against our priorities over the coming years. So that is, I think, your second question. The first question was about the AI glasses. We're continuing to see strong growth in obviously the AI glasses sales over the course of Q1. Demand for the expanded portfolio lineup has generally been quite strong, and we're seeing sales shift now from the prior generation of Ray-Ban Metas to the latest generation, which I think speaks to the value of the improved features, like extended battery life and higher, features like higher resolution video, higher resolution video capture. Sorry. So we're, pretty excited about, the progress we've made with glasses. We see strong interest now in the Meta Ray-Ban displays with the Meta Neural Band. So that's an encouraging sign that there's consumer appetite for display glasses, which is kind of the next generation of how this product evolves. And And yeah, so I think this is an area that we will continue to be excited about and are investing in.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. Thanks for taking my question. Mark, it took about 10 months to get Muse Spark out. I think it's a pretty good pace. Just to help us understand what kind of unlock that is for some of the new products you're developing, and how is the product cadence going to be over the next 9 months on either consumer or business enterprise products built on top of that model?
I mean, the field is moving pretty quickly. So, I mean, I'm very happy that I think the lab that has gone the fastest from standing up the lab to having a very kind of widely accepted as strong model. So I think that's good. I take that as a very significant validation of the effort, that the team is working well together, that the infrastructure is working, that the effort is on track. I think that's basically the main thing that we've learned over the last quarter that I would take away is like where we started what is this pretty big bet, and it's on track for our plan. In terms of what exactly the cadence is going to be, it's tough for me to say, both because I don't really want to share competitively sensitive information and because I think some of the stuff we are more focused on quality than hitting a specific date. I mean, on the research side, this is research, right? We are trying novel things. You don't exactly know when they're going to land. And on the product side, I think we care a lot about just having, I mean, let me put it this way. There's a lot of agents out there, right, that people are building for different things. And there aren't that many that I would want to give to my mother. And I think getting to like that quality bar is something that I care about more than hitting a specific week for launching or something like that. So, but with that said, I mean, we're in a zone here where the teams don't check in with me like once a quarter. We make meaningful progress like day over day. I think that's part of the fun of developing in this world is that people can make very rapid progress. Small groups of people and teams can make very rapid progress. So I think we're going to see a lot of innovation. The timing of this call is it's good in some ways because the Muse Spark release I think was positive. The Meta AI first release I think is positive. I think that shows that we're on track. I'm trying to kind of paint a picture of the very high level direction that we're going in, but I think that the picture is going to come into focus a lot more over the subsequent quarters.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Yeah, Mark, just sort of related to that last answer, but there's a lot of new consumer applications kind of cropping up, everything from like an OpenClaw to something a little bit more consumer friendly that you would build for your mom, like you said, with like Poke or Dreamer, which you recently acquired. So how are these new ideas, I guess, changing your view around the direction that core Meta AI or Dreamer or kind of your overall agentic strategy needs to go? And then the second part of it would be, do you think the lab will stay in this consumer lane, or do you think you want to go down the route that others are going down with code writing and like the recursive self-improvement loop and that direction kind of in parallel? Just thoughts on that. Thank you.
Yeah. So look, on the OpenClaw and other agents, I think that they give you a very exciting glimpse of what types of things should be possible. Now, they're pretty rough systems today. And, to set up OpenClaw, you need to like install a computer locally and then get into a terminal and like configure a bunch of things that, again, like there's, maybe there's hundreds of thousands of people or small numbers of millions of people who can do that. But what we're talking about is delivering personal superintelligence for billions of people around the world. So how do you make a version of that experience that is a lot more polished and dialed and easy, and that has all the infrastructure basically done for people already, and that just works? And that's kind of what we're focused on the consumer side. And I'm really excited about that. I think if you had something like that that worked quite a bit better than those systems and was easy enough that people could just get, then I think you go from having something that, you know, hundreds of thousands or millions of people are going to use to something that is going to be addressable to billions of people. And that has been our primary focus from day one of the lab, is being able to deliver something like that as a product. And I think it's just going to be very exciting. By the way, the same thing is true for businesses, right? I mean, there's the personal version of this, but there's also, you know, a lot of people's goals are they want to create things, right? They want to create websites, they want to create products, they want to grow their products. These are all things that good agents are going to be able to help people do, which I think is partially why this is so exciting. And, you know, in my opening comments, I talked about how today we can handle a few goals for people. They're big goals, right? We can help people stay connected with people they care about, learn about the world. These are big things that people care about, but they're not the only things that people care about. And one of the things that I would love for our products to be able to do is just understand people's goals specifically, and then be able to just go work on them for them, and check back in and whenever you have questions that you need answered. So whether those are personal goals, or you're trying to create a business or do work, I think that this is stuff that I think literally every person in the world is going to want some version of it. And also, I think it is something that scales, where the more you want to get out of it, I think people are going to also be willing to pay a lot of money to have premium or high compute versions of it. So I think that this is it's a very exciting area. But I think what you all should be waiting to see is whether we can build the version that really just works, and how effective we are at converting people who are using our products into being hundreds of millions and then billions of people using this stuff. And then over time, how can we effectively convert that into something that's increasingly profitable by monetizing it and getting the cost down. So I think that's the roadmap of what we need to do. You asked about whether we're primarily focused on consumers or also recursive self-improvement. I think that we've talked about two main goals for the team. I mean, one is this kind of agents vision of what we're doing. The other is that self-improvement is really important, because you can't build a leading AI product if you don't have leading models. So, and you're not going to have leading models in the future if your models can't improve themselves, right? It's you're getting to a point where today the models are still able to learn from people, and then I think at some point the models will have to improve themselves, and that's how the growth is going to, an improvement in the models is going to happen. And if we don't have an ability to do that, then we or anyone else, I think that the companies that don't do that are not going to be leading labs, and then they're not going to produce leading products. So I think that is a table stakes thing that we are focused on. Now, does that make us a developer tools company? Not necessarily. I mean, I'm not against having an API or coding tools or anything like that, but it's not our primary focus. But I actually think people conflate coding with self-improvement more than they should. Coding is one ingredient for the model self-improving. It's not the only thing. And we are focused on all of the parts that are going to be necessary for self-improvement in service of the personal superintelligence vision that we have for people and businesses.
Your next question comes from the line of Ron Josey with Citigroup. Please go ahead.
Great. Thanks for taking the question. Mark, maybe a quick follow-up to a prior question around personal agents and business agents. And with Spark News now live and more models in development, do you look at the personal agent opportunity, which we talked about earlier on in the call, more of a short-term, medium-term, long-term goal? I'm sure it's a never-ending goal, but when we see a product, is the question shorter, medium-term? And then, Susan, I think the ranking recommendation model improvements are very impressive to see, given the size and scale of both Instagram and Facebook. Could you help us understand just how doubling the length of user interaction sequences can drive greater usage? There's a thesis out there that maybe some of the ranking recommendation improvements are along the two. So it seems as if there's a lot more room to go. So any help there would be helpful. Thank you.
I mean, I think that the agents work, there's going to be short-term versions of it, but then I think that there's going to be massive upside for delivering more intelligence and more capabilities in the models. And you're kind of seeing this across the industry. Each, month, each generation of models, they just have more capabilities and can do more things, and people absorb it, and are able to get more superpowers, and it's awesome. It's like the most exciting time in the industry. So I think of the agents as the product vehicle for delivering that capability to people, and we certainly, I think this year is going to be a key period for establishing that as the vehicle for how people are going to use this. But then the model improvement, I think, is going to be something that's going to go on for a very long time. So there's a lot to do here in both the short, medium, and long term.
And then on your second question, which I think is about the ranking and recommendations improvements that we talked about in our that I talked about in my earlier remarks. I think first of all, there is still a lot of room to continue improving recommendations over the rest of the year, and we expect we'll be able to do that to drive additional engagement on both Facebook and Instagram. A couple of the things. First, we're going to continue to improve our data infrastructure. That's going to allow our models to train on more data, and we're adding more detail to how we describe the content that users have engaged with in the past, and scaling up the complexity of our model architecture to take advantage of those larger data sets, like using even longer histories of content interactions. And that should all be in service of improving the overall quality of recommendations. We also are focused on making the recommendations even more personalized and more relevant to any given user's interests. There's work we're doing to redesign our content retrieval system to show more content that matches the full range of a user's interests, and to tailor the diversity of the topics we recommend to the broadness of someone's interests. So someone with particularly concentrated interests might see relatively more of that content, while people with a broader set of interests might see kind of a greater range in the topics that we show them. And then finally, we're continuing to make improvements to our sort of LLM-based tune your algorithm features that allow users to provide more granular natural language feedback on what they want to see more of or less of in their feed. So the sort of the sequence length, which is the thing that you called out, is one of really many improvements we made in Q1, and there is a big roadmap of further improvements going forward.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. Mark, how do you think about the step up as you go from leveraging smaller models in the ad business to use Spark and future large language models going forward? What are some of the key unlocks across engagement and monetization? And then on Manus, can you just talk at all about the strategic importance and the role in developing agentic products for Meta, and then just current status around the tech and the deal? Thanks.
I'll take that question. On Manus, we're still working through the details, so we don't have an update right now. On your first question, which is about sort of the going from leveraging smaller models in the ads business to the ads sort of models growing. There's already some work underway, and I think I alluded to some of this in my earlier remarks, even kind of in the current landscape of the ads roadmap, where we're basically trying to advance the architecture here to allow us to leverage the abilities of larger models. Historically, we haven't used larger model architectures like GEM for inference, because their size and complexity would make them too cost prohibitive. And the way we drive performance from those models is by using them to transfer knowledge to smaller, more lightweight models that are used at runtime. The inference models are bound by strict latency requirements, since they need to find the right ad within milliseconds, and that has, again, historically prevented us from meaningfully scaling up their size and complexity. But in the second half of last year, we introduced a new adaptive ranking model, which enables us to leverage LLM scale model complexity of 1 trillion parameters. And we made advances in the model architecture and co-designed the system with the underlying silicon so it maintains the sub-second speed that is required to serve ads at scale. We also developed an approach that intelligently routes requests more compute-intensive inference models if it determines that there is a higher probability of conversion, and that lets us drive both better performance and increase inference ROI. So there's a lot of work being done there before we even sort of incorporate more of the LLM work into our underlying ads ranking models.
We have time for one more question. Ken Gorelski with Wells Fargo, your line is open.
Thank you very much. Two, if I may. First, if I could, you talked on the Muse Spark launch, you talked about two categories or two verticals. You talked about health and wellness and shopping. Could I dive a little bit, ask you to dive a little deeper into the latter on the shopping and commerce side? And maybe if you could, were there any learnings in the 2021-22 phase where you pushed deeper into commerce on Instagram and on Facebook? Any learnings from that period that you might apply? Is there an opportunity for a next gen marketplace type business in commerce? And then the second, please, maybe Susan, could you talk a little bit about, based on your model improvements and the content recommendations, how much visibility do you think you have into kind of the growth trajectory on the core business? You continue to grow at basically double the pace of the industry, despite being a very large share of the industry. Could you just talk about a little bit about your visibility into that continued performance? Thank you.
Yeah, so I might give you a somewhat loftier answer to the question. You're asking about shopping. I think it's sort of an interesting example of the way in which the work that we're doing is different than what I think others are doing out there. These products, AI agents get better when you fully optimize the stack. That's why we believe that we need to be a company that builds frontier models in addition to building the agents. And then in order to do that, you of course need to build your infrastructure in order to be able to do that well. So we're undertaking this large investment to be able to do that top to bottom. And I think a lot of the way to think about the investment that we're making is a bet that the individual things that people care about and that people are going to be more important in the future. And that's sort of like I think it should be a pretty obvious thing to say, but I think so much of the rhetoric around AI in the industry is around like a company trying to build some kind of centralized thing that like does all the productive work in society in some way or something like that. And that just is very different from how we see the world. Like our vision for the future is one where society makes progress by individuals pursuing their own aspirations. And some people care about big, grand things like curing diseases, and a lot of people care about personal things like finding the right shirt for my daughter. And I just think that we're going to build things that help deliver this vision for personal agents for people. And I think that part of the lane and what is interesting and differentiated about what we're doing is that that's just so different from how I hear everyone else talking about the work that we're doing. So even though I think some of these ideas, they seem like they should be so obvious, I actually think that our approach of trying to empower individuals and building consumer things is just in the details extremely different from what others are doing. And shopping might be one kind of specific example that I think is going to have interesting commercial implications, and I think consumers are going to like it. But I don't hear any other labs out there talking about how they're building an AI that's really good at shopping. And I think that the reason for that is like not that shopping is the most important thing by itself, but because like empowering people to do the things that matter in their lives, whether that's local or understanding social context, or shopping, or personal health things, or understanding what's going on around them visually, which is going to be really important on the glasses. These are all elements of the personal superintelligence vision. I think like a lot of this, and when you're thinking about kind of the investment in Meta over time, I think you should think about it as coming down to these set of values around what do we want AI to do in society. And if what you want it to do is empower individuals and build a world where the AI is in service to individuals' goals, then that is what we are going to build. And I think it's going to be incredibly valuable.
Gosh, I almost wish we could end on that answer, but I will answer the second question, which I think kind of has two versions. One is, a version of like, what's the revenue outlook? And obviously we gave, the Q2 guide, which embeds, I think, both a range of kind of macro outcomes, but also the work that we've, the ongoing work that we have to continue improving both the sort of usage and engagement on our family of apps, and then our ability to continue making the ads better and more performant. I think the second question is maybe more of the second version of that question is more of a higher level question about kind of the overall trajectory of the roadmap here. And one of the things I will say, having been working on this for a very long time, is I'm always really impressed by the team's ability to continue to advance the state of the art here. And our planning process now is, I think, really fine-tuned around this. So I've mentioned on a couple calls the budgeting process, in which we run a very sort of ROI-based process to make sure that we are funding all of the ads initiatives that we think will drive growth in future years. And that's something that is both quite dialed in. And I think that, our ability to measure the impact of that has been pretty robust. And it's, been a very important driver of our ads revenue growth. And that continues to be a process that, again, we ran in this past budget. And as far as we can, as we have line of sight, we feel good about the investment opportunities ahead of us.
Great. Thank you, everyone, for joining us today. We look forward to speaking with you again soon.
This concludes today's conference call. Thank you for.
The real takeaway is that they never need to, never put all four of these Mag 7 names on at the same day, because that sucked.
Yeah, look, obviously, guys, I know people wanted Amazon, but everyone picked Meta in the beginning. I understand the stock didn't move. If the stock was up, people would have never wanted to switch the call. So
yeah, hard to switch midway through.
Yeah, I asked all these guys in the private chat, and we all agreed a lot of people would be upset if we just switched because one stock was up versus it wasn't. So obviously we'll analyze all those companies together, but I understand it wasn't the most entertaining because the stock wasn't up. But, what do you do? At the end of the day, 25% of you wanted Amazon, 45% of you guys wanted Meta, so we kind of have to go with Meta. Regardless, a lot more than 45% of people own Amazon here, and this one has broken out, 5%. So we got a lot to talk about, a lot to get into. Sam,
let's go.
I'm sure you've been keeping up with Amazon. What's happening here?
Yeah, I have been totally keeping. I'm using Perplexity to watch the live transcript, and I'm not really paying 100% attention to the transcript that's going through, but I'm looking at the price action jump up like that. I'm like, hold on, what happened in the transcript over here? And then some of their comments, and as far as the custom silicone that they're producing with Marvell technology, which is also up 2% today, or after hours, is that they said that if the custom silicone business was a separate business, then it would be a $50 billion run rate. That's freaking insane, because that's a very high margin business for them. On top of that, they made some other commentary, but I think that's around the time when the stock basically started flipping. And dude, this thing was down 5%. Now it's up almost 5%. That's an insane freaking move. What is that? What is the market cap?
245 to 275.
That's almost a $500 billion move after hours. And then Microsoft basically went green for being down 5%. Dude, freaking, and the Qs are at an all-time high. They're at an all-time high right now.
It's all AI infrastructure. AMD's moving after hours, CoreWeave, Nebius. It's just all about the chip plays, the data center plays. That's where people are realizing the money. And Google showed off TPUs are going to be sold to external customers. Trainium's doing well. NVIDIA is going to do well. And there's going to be a whole list of companies that'll benefit from, memory to photonics to, custom silicon with Broadcom, and just a matter of how long that this lasts. And I'll defer to Jose for that. But
I don't know that, but I mean, what we heard is at least 2027, right? I mean, if capex, at least from Google, they mentioned they're increasing capex in 2027. Things are looking good. What I did thought was interesting, I was kind of looking at the Microsoft numbers. I think they mentioned that capex for calendar year was going to be $190 billion.
Yeah.
And about of 190 billion, 25 billion was due to increase in component cost. I'm going to guess that is memory. But it's crazy how memory is such a heavy portion of capex alone. Just the price increases of memory itself. And I don't know. I do think eventually some of these big tech players are going to get angry with what they're paying for on memory.
Neil, before we get into Meta, your thoughts on some of the price action? Google, obviously the best performer. Amazon, close second. Microsoft, actually a hell of a rebound. Microsoft still red, but it was at 409 and it came back after somewhat good. I honestly don't know why it came back. Like
their guidance for next quarter was
the guidance wasn't a big beat. It was a beat by like 25 million. It wasn't some massive beat.
But I think the beat was on the cloud side. Cloud side was expected to be 37, and they actually projected around 40+% on cloud guidance for next quarter.
Okay, so there you go. Cloud beat. Neil, your thoughts?
Yeah, I mean, I don't know, the call from Meta, because we see the price action, and of course we're happy with all the rest. But from Meta, I don't know. I mean, still an amazing business, but this call, did
was
they
kind
say
of trash.
something?
Yeah.
Didn't really provide that much extra color that we were waiting for. On the Amazon thing, Sam, you said that the 50 billion, the 50 billion figure actually isn't new. I think they mentioned this a couple of weeks ago during one of their events, I think. So it's just them reiterating that their chip business, if it was a standalone business, it would have been, of course, an amazing business.
The other reason I think Amazon started pumping, quite frankly, because again, as Neil said, Amazon didn't say anything new. Like, I mean, outside of the AWS guidance, I think it was really this. Anthropic in talks with investors to raise funds at a $900 billion valuation. The reason I say that is because another stock that was up after hours by 4%, good old Zoom, which has zero tailwinds going for it outside of their $50 million stake 3 years ago in Anthropic.
Well, I'm pretty sure Google has quite a large stake as well, something like 14%.
So that probably pumped Google. I mean, that Anthropic news, because we all knew they were probably worth more than 380 billion, but if they just more than double their valuation, I mean, Amazon stake just got a lot heavier. Same with Zoom, same with Workhouse, same with Google, all that.
Speaking of stake.
Okay, Tanner, your thoughts on Meta? What'd you think? Why do you think this one is the only one that couldn't catch a bid?
Well, because I don't think they're in the hardware space. They're not going to benefit from external clients sell. Like I really think the other three names that they're being compared against are three of the largest data center providers: Azure, Google Cloud, AWS. That's where the market is rotating to. They're just realizing the margin's super high. It's not cyclical. This is recurring business. It's a gold mine right now. And Meta's not there. They are the largest customer of those data centers. I think they're going to do fine. The growth that they're putting up is insane, 30+%. But obviously, whenever Mark Zuckerberg starts talking about the metaverse and starts talking about the glasses, no one wants to hear it. It's not in vogue right now. It's AI or get out. And even that, sorry, can I add one thing? The whole Muse Spark thing, they're not even trying to be a frontier model the same way Anthropic and ChatGPT are in terms of charging tokens and being like extremely competitive there. It's more like an internal tool, maybe Meta AI. It just doesn't feel the same. And so they don't feel like they're going to be, one of the hyper labs like the way ChatGPT or Anthropic is.
But I think that kind of makes sense. I mean, for me, it makes sense, right? That they shouldn't be the AI lab. They shouldn't be trying to sell those tokens, but it's a way to, I know people hate it, but if he wants to talk about, if his future is the AR glasses, kind of having a model that's niche for that would be crucial. And kind of with the advertisement, instead of paying for like other tokens, if you can kind of internalize, make it your own self, and just kind of like how these big tech players are creating an ASIC solution and chip, kind of think of the way I see this Muse model is like a ASIC model for its niche. And if you're kind of creating your own model, you'll be able to kind of get better rewards in the long term of things without paying some of those token margins.
Yeah, I'm not anti that at all. I just think the premium is going to the customers that are able to get extremely high margins. I'm sure Meta, like, honestly, I do believe in them long term. But right now, if you're not catching like the absolute fastest names right now, investors are just freaking out.
Yeah, it's really all about semiconductors right now, hyperscalers, data center, like anything to do with expanding on hardware. It's so heavy weighted toward that. That's why when you saw that OpenAI news with missing the revenue, like the market was highly impacted by it. And there's just not enough market cap when it comes to these software stocks and the other places to bring the market up or hold it up. So it's a little bit scary, but can't really worry too much about a big collapse if things are just getting, I don't think it's euphoric yet, but I think it's getting there.
Qualcomm and Nokia were up after hours. I mean, to your point, Sam, you're just getting anything in the hardware space, infrastructure space. Bloom Energy is almost 300.
That's crazy.
I mean, maybe this doesn't stop, right? Like, if it doesn't stop, then, is this the next few months of the market, which is SanDisk is going to 2,000, Micron's going to 1,000, right? Like if Micron gets to $1 trillion, let's say tomorrow, which would still put their forward PE at like 15, which wouldn't even be that crazy. Do we think it can stay at $1 trillion for a long time? Right? Because I think most people would say no. Even the hyper bulls would say, well, eventually it's not going to be at $1 trillion. Most people will say, no, Google will be more than 4 trillion because there's a business model that's reoccurring, it's growing, it's constant, it's not cyclical, all that stuff. So it's almost like some of these names that are getting the bid, they're getting the bid for now or maybe for a couple years from now. But eventually, if that bid disappears, when does the market front run selling the bid they inevitably gave them because they were so excited to bet on their future? And I don't think we know what the answer is. But then you have a Nebius, which has a vision of becoming like a hyperscaler themselves to an extent, right? Like, or an actual cloud, not just a neo cloud. So I think there's a lot of different versions of how these names are thinking of the story.
Yeah. SoFi got a mention on the Amazon call, by the way.
Notos with Kramer. Do we want to watch that?
I don't care.
That's how you know how bad it is. No one wants to even watch it.
No, but if it's just obviously I'm going to listen to it on my own time. I don't want to be the 20% vote and then we're all sitting here. I've been streaming for 10 hours today. What I really want to do is go walk my dog. That's what I want to do. I want to step away from this computer right now.
I get it.
Your dog's got to take a piss, dude.
No, I mean, that's fine. Yeah.
The dog is the portfolio.
All right, so AMD, Intel, Nokia, Qualcomm getting the derivative pump, Microsoft flat, Google, Amazon big pump, and then Meta's the laggard. I think my thoughts are I think this dip is really stupid for Meta. The call sucked. Zucks is being way too cocky on these calls every time, answering like he has better things to do, which he probably does. But also,
he's probably vibe coding.
I mean, like, but also, like, we all invest our money, like it would be nice for 90 minutes for him to just act like he cares. You can just tell he doesn't get it. I mean, they were whispering, like, do you want to take that question? Do you want, like, he doesn't want to be there. I get it. But
I think he's also a bit more excited now that Muse Spark is actually a good model. Because Llama 4 sucked.
Yeah.
Sucked really bad. Muse Spark is now already up there, and to the point you Tanner and Jose talked about before. Look, Meta doesn't need to sell the tokens because they're already profitable as as if the others they have no choice because otherwise they go bankrupt. At the end of the day, Meta, when they figure whatever super intelligence out, why wouldn't they sell you a small subscription through Instagram with their billions of users, or WhatsApp with their billions of users, like a small fee, and you have an AI agent working for you 24/7. Poof,
But
$1
Neil,
billion business.
you would agree that even if Meta never figured out super intelligence, the ads business itself, because
Yes.
just like Google search, that deserves to be worth $2.5 trillion right now.
And e-commerce that they talked about as well, because e-commerce is going to be huge for them.
Right. To me, it's absolutely ridiculous to see it down like this, and then see other names that, again, are just getting up because they're benefiting from Meta's capex. But the core business and the way that it's compounding, just like if it was Google search for so many years before this whole AI narrative, got a multiple, and it's not getting that multiple because of that narrative overhang. That narrative overhang is a real thing. And we've talked about it since January, right? That the street is so upset that Zuck is spending all this money just for ads. They need something else. And Meta Muse is more exciting. But Meta Muse is nothing like fundamentally real yet, other than it's number 4 on the App Store. But, it's not inside of the products yet. So, I mean, it's a fair reason for the discount, but one could argue this thing deserves at least 25, 27 times earnings, which would put it at a 800, 850 stock right now.
It's called Muse Spark. Meta Muse sounds like a fiber supplement.
It does sound like a supplement.
That was a Metamucil joke, and no one laughed, and that's all right. But we're tired.
We're tired.
Question for you and the chat: who goes from the green stocks, from the green names? Who goes red tomorrow? Because I don't trust this action right now, because it's after hours. It's not that much volume, but. Do we see some flippening, or do we see some more green or red?
Tanner was so upset. He was so embarrassed.
No, someone said ban me. And too many dad jokes.
I don't know. I think if I had to bet, I think Meta sells off more tomorrow. The rest of these guys still pump. I mean, the street's so dogmatic about this. I think Meta may be below 600 tomorrow. Look. If you gun to my head, I would say it'll stay flat around 625 to 640. But could I see it dumping tomorrow? Yeah. Could I see Google pumping to freaking 380 tomorrow? Yeah. I feel like maybe the price action sticks going into tomorrow.
Yeah,
I mean, Google objectively had the best quarter, right? We can admit Google objectively.
Yeah, they dominated. This is why I like owning all the Meg 7s. Like, I won't even feel bad holding Meta on this drop. Like, this is in all, like, I don't even know what to call it. This is a fake drop. Like, what's the forward P of this company tomorrow morning? Like under 20. Like, we're paying like 19 times forward earnings for Meta. Like, they dominated on EPS and fell while being the cheapest Mag 7 name. Like, for growing at the highest growth rate that they've seen in years and years and years. Super profitable. Like, are we just buying AI, or are we buying like quality names? Like, is there any fundamental analysis going into this? Like, are they getting replaced? Is Anthropic going to take over social media?
Dude, last quarter they were growing 16%, last quarter this year, 16%. That's 33% now on a higher base.
Yeah, like we're not going anywhere. So I'm a happy Meta shareholder. I'm a happy Microsoft, Amazon, and Google shareholder. These companies are so quality. Like, I love these names.
If Amazon gets the breakout tomorrow as well, I think Amazon 300 is going to be on the deck for a lot of people that have been screaming it. I think Amazon 300 is possible this year, but if you start breaking that 280 level, I think a lot more people start feeling it's going to happen. So yeah, tomorrow we're going to see how the street thinks of it. But overall, all the capex increase is bullish for everything besides the company's increase in capex. Eventually, hopefully, that bid goes back to the companies that are actually spending all this money.
Is Reddit impacted after hours or not?
Reddit is flat. Snapchat is flat.
Okay.
All right. That is it for us. Thank you, everybody, for being here. We'll be back tomorrow. AMD getting a bit after hours because of Intel. Trump did tweet about Intel. He said, Trump said, I'm happy I'm making Intel money. Or he said, I'm happy I'm making the United States money.
Yeah.
as
I
the
made a
utility-
joke. I was like, when are we going to get the portfolio screenshot?
all of this is happening, by the way, with oil pumping. So, I mean,
Intel stock ticker symbol INTC.
I mean, to be honest, dude, it was a good investment.
It was. Nvidia also invested $5 billion.
Yeah.
So
Jensen's also quadrupled his money.
Yeah.
All right, that is it. Thank you, everybody, for being here. We'll have a lot to analyze tomorrow on all our channels. Everyone's links in the description. Appreciate everyone being here. It was a 4.5-hour stream.
Meta tomorrow, or Apple tomorrow.
Apple,
Reddit
SanDisk,
tomorrow,
Zeta.
Tanner.
Reddit, Zeta, SanDisk. That's the one I'm
Western
going to be paying
Digital.
attention to. Yeah.
Oh, Western Digital tomorrow too?
Yeah.
Mm-hmm.
Oh, there's a lot tomorrow. Okay.
So you can fade everything else. It's going to be the memory. All right.
Thank you,
Time
everybody.
for an
Appreciate it.
Alzheimer joke.
We'll see you guys tomorrow. Bye, everybody.